Hello, traders. Welcome back to another episode of the Traders Show. This is episode 15. My name's Kenneth Munene. I'm the founder of Financial Hub. Today I'm joined by a couple of people. So on my right, we have two people. Caleb Sam is finally back. My co-founder, colleague, and work together at Financial Hub. We have a new guest, Francis
Kisavo.
Okay, we'll introduce Francis later. We have Lawi on my left. We're going to have an interesting show today. Basically, we'll be talking about trading. We have a new voice in the show. So we'll be talking about trading, all aspects of trading, all the way from the start of your journey to trading some good amount of cash. So before I jump into any details that we'll be tackling, I think it's important for us to give the market update. It's been a bloody week, a very volatile week in the markets. The VIX is up 6%, 6.5% to be precise. We're now trading at 22.97, up from about 16 sometime back earlier this week. Gold trading at 1781, coming back all the way from about 1725 last week. Oil 64, going back down from 67. The pound is trading at 1.3706, GBP AUD 1.9092, Euro USD 1.1676, Euro Yen 128.2. The Dow finally breaking the 35,000 barrier to the downside. We're now trading at 34,750. For me, that's a signal. I'm really paying attention to what will happen there. Nasdaq coming back below the 15,000 mark. We're now trading at 14,767. 15,000 was quite a level. We're now below it. The dollar coming quite strong. We're now trading at 93.43. Francis is a good trader in the Nasdaq, so we're going to give an update on the Nasdaq. We've not done it before. Nasdaq trading at, not Nasdaq, the DAX trading at 15,750. So before I introduce the guest, I think it's important for Caleb and Lawi to give us their weekly updates first. Caleb, you're finally back in Kenya.
Yeah. So guys, I'm back. Had a good time. I've not been in, I think the past three podcasts, taking a short break. But yeah, back to business, back to work, back to trading, and everything is fine. For the past time, for the period that I've been around, not traded heavily, but been doing a lot of back testing, a lot of research and reading as well. But I have been trading, and it's quite fine, quite fair. This week also, I remember I had a few trades. I had 2 trades this week: Aussie dollar, USD card, both hit stop loss. I'm seeing them today morning. So I think that I had a 1% risk on each of them, all hit stop loss. So I'm yet to journal that, reflect on it, and work on seeing what happened on those pairs. I've just seen them now when we walked in here, which is what I normally do. I normally take long-term trades and let them, I give them space to breathe. I'm not really a short-term trader. That's how my mind works. That's how I work well in trading. Apart from that, everything is fine. I'm happy to be back, and yes, we'll have an interesting talk today, and I look forward to it. So that's it from me.
That's nice, man. Okay, personally on my end, my trading has been a bit slow also. Markets for me have not been giving a lot of opportunities. Had one trade on Monday on GJ, hit stop loss. Running a gold trade right now, so still a few pips in profitability. So I'm watching that for maybe I'll run it maybe to next week. I don't know how it will play out. There's some volatility coming in, so the dollar is pumping also. So maybe the gold might dump a bit, a few hundred pips maybe. So apart from that, I've had also an oil trade today morning, which hit stop loss. So those 3 trades have been my market watch for the week. Other than that, just office errands and mentoring our students. So that's all for me on my week. I'm glad Francis is here today, one of our office mates. So we'll also be having a wonderful session with him and be glad to learn from him also. I hope you guys can also learn from him. Yeah.
Yep. So guys, at least you've heard my colleagues are doing well, but I've heard this is a losing week on my end. For me
And my
personally, I have, I think, 3 trades. I had some oil longs early in the morning. Can see towards London, I've been taken out. I had some Dow shots, at least made money on that. And I also have some gold shots currently that I'm watching. Anyway, now let me introduce Francis. So I met Francis in our office. So he's a neighbor. Just the next door, I think 3 or 4 steps are from our office. So I was walking across the office and then I saw some 2 screens. And anytime I see a screen and I see a chat, I'm interested in talking to the person behind that chat. So that's how I met Francis. And Francis is a 6-figure trader, to be precise. He's been trading since 2013. He'll tell us the journey all the way from when he knew about the markets to trading, how he's trading. There's a lot that needs to be learned from such a man. There are very few people, I think, in Kenya who are trading, and there are even fewer people who are trading a 6-figure account. So pay attention and try to learn as much as possible from the man. So we have a set of questions that we'll be using to guide the conversation, but basically we'll try as much as possible to answer the questions that you guys have been asking us, the questions that us guys think are important for you in your trading journey. So to start off, thanks a lot, Francis, for showing up. And how did you get started in trading? I think that's the first most important thing. How did you land on the charts?
So thank you guys for having me.
welcome.
It's a pleasure to be here, and it's good to know, having other traders, people in the same field. You find, being a trader in Kenya, you find the majority of the people are in regular work. So whatever you go through, it's very difficult to explain, to understand, for them to get you. So it's good to know people like you guys who are in the same field. So going back into the question, how I got into trading. So my background, education-wise, I did economics and accounting. And when I started, even like way before, I knew I wanted to work in the financial market.
Back then?
Yes, even like back then, like even when I was in high school or whatever.
What year are we talking about?
This is I was in high school. I finished high school 2004.
You knew the markets back then?
Yes, I knew. I was in a.
Almost 10 years later.
I was in a very good school, Light Academy, and the thing about that school,
Light in Karen.
Yes, that's the one.
Okay.
The thing about that school is that you got a lot of exposure. Like there are in that school, it's a proper mix of people from all over the world, all over, just people with different experiences.
Yeah.
Okay.
And this is for me, having come from a very regular like primary school.
Yeah.
And by some chance, I found myself in Light Academy.
Yeah.
And then there, I got into. I had a computer teacher who were learning programming and stuff like this back then.
204. Yes, you had to
Ahead of your time.
But it's this thing, basically just exposure to the internet
and things that are happening.
I knew because I there was this guy called Terry Ryan. He was the chief economist at the central bank at the time. So it was somebody, because I had seen him, heard of him, like I aspired to be like him from that economic perspective. But then I now later with more learning, I realized there is another side of the financial market I can get into and get paid, basically. and get paid. So that's how I ended up doing economics at the university.
Which university?
Nairobi University.
Okay.
Nairobi University, 2006 to 2010. And now, and so when I got into the university, so I knew about the trading element. So I was even trying at some point with some friends, trying to exchange currencies physically, moving from one broker to another broker to try to find some
Forex bureaus.
Yes, Forex bureaurs, trying to get some arbitrage opportunities. Get a good quote at the bank and go and give it out initially or something.
Serious?
For a better rate. Yes, walking around with
No,
real
physically.
physical cash.
All enough to trade physically.
Yeah. But then, so that was then, and then we finished campus. Then life came, and with life it comes. No Johnny Kazi. You must work, get your bills paid and stuff. So I got into accounting, really. So that was my first job when I did not get into what I needed, because I wanted to go into audit at the time. So when I did not get that, I got a job as an accountant and I started working.
Yeah.
So in my second job, my first job, in my second job, 3 days into, or even like 3 weeks, no, a week or so into the job, I'm seated at my desk. We are like several accountants. It's a big room. It's a big company. It's a listed company in the stock exchange. So we're in this big room as accountants. I'm handling my own docket. Then, like, you know, like the way desks are divided, I stand up at some point and the guy across, like directly from me, the one I can see his screen, I see him hide some chats.
Hiding.
And, like, you know, like just minimize. And, you know, like when you see those chats, you just know. Like the weekend you're saying you saw some chats, and then you just know that.
That's
like
a
I knew it must be something to do with currencies or markets. As in, for me, trading investment is something I've always done. Like even when I was in campus, I did all the IPOs that came out around then. I participated in some way, like the Kenjin IPO when it came out. I was there. Kenyari, I did something.
So you participated when the stock market in Kenya was hot.
Yeah. Like particularly the Kenjin IPO, I did really well, you know. And
what price did you buy and what price did you get out?
I bought 9 bob, or I can't remember, the IPO price was 9 or 11. I cannot remember. But what I had done, I had gone out to KREP Bank, which is directly opposite our office right now.
Okay.
And this is when I'm a student. Convinced the credit manager there that I can make money. And they gave me a loan of 100,000 shillings.
Back then.
And I'm a student. I'm a student. And I went directly, like at the time, there was this Forex, not Forex. What do you call them?
CDC accounts.
No, not
brokers.
CDC. Yes, the brokers. There was one which was in Corner House. I had gone there, opened an account, and immediately put in the money there. And the IPO came. Price on day one. You
knew the IPO was coming when you were going to borrow the money?
Yeah. As in, I bought on the basis of the IPO and I used the shares as security. They allowed that. And so we got in day one. So what happened was that there was a serious oversubscription, extremely high. As in, there are people who bought shares for $1 billion, Bob. For Kenjin, like Kenjin is a very good company. It's a very good business. It's in its own niche. There are no new entrants. There is no competition. Maybe now competition has come in. Yes, the market is there. Like it's a very good company with good cash flows and everything. So it was a good investment opportunity. So what the people who are giving out the shares decided for everybody who applied, we are going to give them 100,000 worth of shares.
And that's what you had?
Actually, and that is exactly what I had. So I got the maximum allocation possible. Actually, I got a refund. They gave around 67,000 or thereabout. So I got a refund of 33,000. And then for my shares, day one, you see all these people who had their funds refunded, day one went to the stock market to try and buy. That day one, I sold mine at like 49 bob.
Serious?
Day from one of my, from 9 bob.
49.
Day one of Kenjin opening at the NSC. Back then, the NSC was at the Nation Center. That day, me I sold mine. I got out, took my money, paid my things, and walked out. And that's how I got into
like that
investment. You know, like so. By the time I was finishing campus, I knew the kind of things I wanted to do.
Okay. So
I did Kenyari. Kenyari did not do so well. I did Safaricom. Safaricom did not do so well at first. Like it went up a bit, then came down.
Yeah,
you know.
I remember.
But for me, Safaricom was like a long-term objective. Like in fact, for me, investment in shares is usually just long-term. It's rarely speculative. So like you just buying them for the dividends, for your retirement, stuff like this.
Okay.
So when I saw this guy, he had an MT4 chat. We got talking. You know, like we immediately became friends. Like immediately.
Trading in a form yeah,
like we just became friends, and him and his cousin and some other people who were trading. So that's how I found myself now into trading. This was now in 2012, 13 thereabout, yeah. So this is around December. So I've seen MT4. I've learned that there is a way you can do this in an automated fashion. So now I'm into like, at this point I'm not doing the physical walking around that I was doing when I was in campus. We had a lot of free time. But now I'm working. So I have this automated way to do it. So I started, getting to learn Forex Factory, Baby Pips, these places, the usual
Maybe
places.
this was there in 2012.
Yeah, Baby Pips, the School of Pipsology has been there for a bit.
Everyone has
School of Pipsology.
Graduate hapo pia sisi.
Yeah, and that school is like, I think that school has everything you need. If you go through that
Yeah.
school,
All the basics.
it's like a proper school,
Yeah.
and it's free.
And
like
it was free back then.
It was still free. It was still free. Then there were those traders. I cannot remember their names. They had funny names, good names, trading sort of acronyms.
Okay.
Yeah. So I was following these people, trying to see what they're saying, like the weekly, their reports,
Outlook.
stuff like this. But at the end of the day, I was trying to. My friend is called Elias. I'll send him a link to this. He'll watch this. Elias had been doing it for a bit, so he knew a few things. He knew a few things here and there. So like he helped me at the start to try to know where to go. So like those things for Forex Factory, Baby Pips and stuff like this.
Yeah.
So, but the one thing he told me and showed me was like, what do I need to do? You need to get a strategy. You need to have risk management on point. So now I was just trying to learn this. Now, as to the strategy, as to what, now that is where I was moving around Forex Factory and all these other places. And Forex Factory is also a very big
Platform.
pool of resources.
Yeah.
So and some other places. So I got a lot of the initial ideas, which I tried. Some worked, some failed. But basically, I was into trading at this point. Yes.
Okay.
And
nice.
the internet, how is it back then as compared to now?
Hiyo siku wifi kweli ilikuwa hata kila.
Actually, yeah, it was the Pentium 4, the computers that is. But internet was good in the sense that you see, I was trading and working, and my employer had 100 Mbps. So
Okay.
Okay.
So you'd use it vizuri sana.
very good. But the
And
thing
back
is,
home?
back home, you were just using Safaricom, but I wasn't trading a
Bundles.
lot. Yeah, I wasn't. The thing is, I have never been those traders who work like overnight and stuff. Just specific times doing my thing.
Okay.
That's just been it. Yeah. So I never. There was a time that came when I needed the like overnight trading and stuff like this, but this mobile internet is sufficient. Yeah.
Because in 2012, mobile internet was.
Internet has been good since around 2005, 2006. When did they
Serious?
land? When did they land that cable in Mombasa? Even before then, even before that cable came, we had internet has been good in Kenya. We are very lucky.
As we were young, man. That was GT cable. I don't remember.
There is the undersea cable which brought fiber optic into the country.
Yeah.
When that thing came is when internet really blew up. But even before then, it was the days of cyber cafes and stuff. Internet was still available.
Yeah.
In fairly okay enough. Trading, you don't need like, I don't know, 100 Mbps. 100 Mbps is overkill. Even 1 Mbps is good for MT4.
Yeah.
Very
It'll work.
good.
Yeah.
Very
It'll
good.
work very, very well.
Yeah.
And how did you like transition now from just learning everything you had to your first live account?
So I have had friends in this business. So my friend happened, a guy we were with in high school called Duncan. Duncan, he happened to know what I was doing, or I told him, I cannot remember. And he was like, it's 40,000.
Try your luck.
Why don't you go and try this thing?
Serious?
Yeah. We were seated at that savannah across the road.
I know it, yeah.
Yeah. So I basically just got started like that. That was my first real money.
$400.
Yes, $400. And
How long did you last before you were out of business?
I like the fact that all of you know what is happening here. I don't have to say what happened to that one.
Yes, we all know.
How long did you last?
So it happened. But the thing about that account, demo is one thing. As
Yeah.
in,
So actually, you were demo trading for a while before
you can
hopped
demo
into
all
life.
you want. Like you demo. You demo to Mount Kilimanjaro. But demo can never equate real money.
Never.
And they measure that
True.
real money. And real money need not be $100,000 or whatever. It could be even
Yeah.
$10 shillings.
Yeah, exactly.
Yeah. So that account taught me. It basically opened my eyes to trading and what trading took.
What it takes.
What it takes and that side, the emotional side of it. But the crazy thing I can tell you guys now, even then, like after that account and the experience I'd gained maybe for a year then, I thought I knew, like I'm good now, but I realized I knew shit. I did not know anything. Like even when I thought I knew,
Exactly.
I did not know.
Yeah.
And the thing is, I did not know.
Exactly.
Yeah.
Good point. Good
Yeah.
point.
That's a
And
big
that's the problem with
That's a
traders,
problem,
Yeah. So
You think you know, but you don't know.
yeah, as in I really thought I knew, because even after that now I traded a bit, got in my own money, trading, and
And I'm assuming you are losing. So how are you handling?
I got first I think beginner's luck and stuff. I actually made money. I remember at some point I had once made $300 and I was like, why am I being employed? Like I made $300 and my salary was not that much. It was not that much, just a few multiples of that. But I was like, I can do this, I can do this. And so I was a bit, you make money, lose money, make money, lose money. You find it's like all the money you make, you give it back. All the money you make, you give it back. Yeah, like so there was a lot of whips or
Volatility.
yeah, as in my portfolio, not necessarily in the market.
Yeah,
just
yeah,
my portfolio.
Portfolio.
So there was that, and but at some point I felt it's as if I have become quite good. So I decided to quit employment so that I can do this
Full time.
full time. Yeah. And at this point, I had acquired, I think, around $5,000 in savings and stuff to start the business. So I did that. That was in 2015-16, I think. Yes.
And before you did that, you had at least a track record of a few months trading well, and
Not even months. Like since I knew trading, I started trading. I never stopped. Like even
you were
that,
always live.
even that $400, I took it in within the first 3 months of trading. It's in errors after errors. Like it
Learn on the job.
Yeah, basically, I've learned on the job. I've lost a lot of money on the job. So that's how I started and got into real life, basically trading.
Okay.
So now the money that I had saved, I put it up for trading, because now I think I was I knew a few things.
Yeah.
It took very long before I could be wiped out of the business.
Okay.
Yeah, it took very long, but that long, I don't mind it because it was just experience, really.
Okay.
It was just experience. Yeah, so it took very long, and actually, what took me out of that, basically, I finished my chips on that was because now I did not have another income. So if I don't have money for rent, already I'm living alone. I have my bills and stuff, so I would just have to go back to that account.
Okay.
Yeah.
That's
So one of the things now, maybe you can tell your people, your guys, is that you don't quit so that you go and start trading until you're like really profitable.
exactly.
yeah.
Because
True,
what
true,
happened before I quit was that with that money, I already had the money and put it in trading. I made $700 that month. Then the following month, I made, I think, $300, $400. And I was like, it's fine. It's not like my job, but it will give me something.
Some time.
And then I'm independent, and then I can, because, I was working in finance at a fairly high level.
Yeah.
So my time was really engaged, and
Okay.
there was a bit of traveling involved. So you find I don't have time for trading. So
Yeah, for
I in my mind, I was telling myself, I've made this money without really applying myself as I should.
Yeah.
So I was thinking, the thinking was, if I apply myself,
You'll make more.
I should make at least, at the very least, equivalent to
Your
What you're
job.
doing.
what I was earning at my employment. Yes, but I learned after going out.
Yeah.
I think the fact that I was working was a good thing for my portfolio.
Yeah. It was
Because
not,
when I
it was
did
not a
not-
disadvantage.
It was not a disadvantage. It was a good thing because I did not get to overtrade. I did not get to be on the markets all the time. And so over time, because now I'm there a lot, your opportunities for losing are more. You're maybe making more mistakes,
Yeah,
over trading.
Psychology.
At that point, psychology had not even started. Like in my mind, I was just working, thinking back now,
Mm-hmm.
I honestly, as in I knew, like there are these things but you're not really applying. So
Yeah.
I knew psychology was a big thing, but to be honest with you guys, at that point, thinking back, I was still working on my strategy
And
and risk management. I was not I wasn't really working on my psychology.
Okay.
Yeah. Maybe you can go on to the next question.
And how do you now? I'm sure you've now formed a solid strategy around how you make decisions in the markets. I feel like it's based on technical analysis because I've interacted with you.
Yes. So
Can you describe to us how you basically go about searching for a trade opportunity and how you execute it in the market?
So for me, I have tried all methods. Like I've been a swing trader, I've been a long-term trader, like all in trade for even 3 months. So like I've done all those things, but over time, I've become more of a very short-term trader. I even can say a scalp. But how I came to this, I think, was informed by my own circumstances and my own capital and everything.
Yeah.
Because you find, for you to enter a trade, which you're giving yourself enough space for, say, a month, to do the trade a month, you'd find I'd have to choose a very small size of trade just to give it that space. But the period and the potential outcome does not equate my needs.
Okay.
So that has informed how I came into this, the smaller side of trading, because then you're able to get into fairly
huge sizes,
bigger sizes, which would, because of my capital at the time, which would give me enough for my needs and stuff.
Yeah.
So, but I've also, trading is a personality thing.
Yeah.
What is it that works for you? Because for me, you'd find, maybe for instance, I'm holding a trade for even, let's say, 2 weeks. 3 days in, clearly this trade is going some other way. Some other way, and my personality tells me to interfere, and could be for the right. I could interfere at that point, and it's actually the best decision I've made, or some other times it's not.
Yeah.
So there is that element of my personality and what works for me.
Yeah.
And so I do trade. I do very short-term trades. So you wanted to know how specifically I identify opportunities.
Yeah. What do you look for now?
So for me, I'm into reversals and continuations. So I'm looking for on a downtrend even. It could even be a very strong trend. I'm looking for those small pullbacks.
So you're betting against the trend.
Betting against the trend, but not necessarily. So now I find myself I'm doing both. I could be there could be a small pullback, which is really just a continuation signal.
Yeah.
So you're trying to choose enter the same that kind of trade. So, but you'll find now, I wouldn't say I go against the trend all the time, because there are certain, in my trading plan, there are certain things which I look for.
Okay.
Before I even go into the specifics of what specific trade I enter. So for instance, I wouldn't be trying to bet against the trend outright.
Okay.
So if the trend is clearly a trend, like now for instance with the NASDAQ and whatever,
Yeah.
you will not find me trying to do longs. And this is you can even say in the 15-minute.
Yeah.
A trend on the 15-minute, I would not be trying to go against it.
Okay.
It could be not a trend in the 4-hour at all even.
Yeah.
But I would not be trying to go against it, because the sizes I use, you find they are quite significant. So even a 50 pip stop loss is
Quite big.
it's actually quite big. I wouldn't be able to to support that. So first things I'll be looking at, what is the direction of the trend. So
Okay.
that's the first thing. I use moving averages a lot. Where is the price vis-a-vis certain moving averages? Yes. If it's above, below, that kind of thing. And then now trying to choose the specific entry points. And now those entry points will be based on those pullbacks.
Okay.
Then there are, so now because I also trade short term, there are a lot of where the market plays with your mind, fake setups, so to speak. So you find it could be you're trying to identify also to make sure you're not in one of those fake situations.
And how do you avoid that?
So I use MACD. It's a very good. I find MACD to be a very good momentum indicator.
Yeah.
So there are certain things I think MACD and moving averages work very well together, because if MACD is saying something contrary to moving averages,
the trade isn't good.
yeah, it isn't good. It just isn't good. And I think now with experience, I've learned to check, to really just be patient.
Yeah.
I've realized patient is a proper skill.
For a
Did,
trader.
did you have it at first?
No, and I did not know I did not have it.
And how did you develop it?
So maybe now we can. This is now the part where when I became a proper full-time trader. So like at that point when I quit my job, I had to go back to working again. So I went.
Oh, you did?
Yes, I did.
Okay.
I got back to working totally, like fully back in finance.
Okay.
Grew in my career. I've worked now in finance for like 10 years. So
Okay.
before I came here, so I really got into it, but I never stopped trading. So like I was always trading on the side, trading. But now the issues of psychology and things like this.
Yeah.
These are the things I've developed when I've come here.
Okay.
I'm trading full time.
Okay.
Because now when I came in, first I was trading more money, and there was bigger expectations for results and stuff like this. So you find you're really checking on your performance to see what is holding you back.
Yeah.
So for me, I've learned, for instance, having a strategy is all well and good, but a strategy cannot remain the same. It has to keep changing. It can.
The markets are dynamic.
Yeah, it's in even the strategy itself. You cannot be just stuck on these are my rules. If price crosses this point, then you do this or do that or do this other thing. No, you can never really be stuck on that. You have to continuously keep changing the rules to fit the situation.
Okay.
Because every day you find, I don't know whether you guys do that, I'm sure you do. Like I think I heard Eucalypt say you reflect on your trades. When you do reflect on your trades, you do see like maybe potentially a mistake you did, or maybe a new lesson. You're like, so if this does this, then it need not necessarily fit your strategy.
Yeah.
So
Okay,
you need to include that in your new thinking going forward. So that is the thing I think for me that has helped me really actually change my performance from being up and down to more or less. I wouldn't say I'm there yet, to be honest.
True.
I feel I'm still learning. I'm still growing exponentially actually right now, because now I'm doing it full time, and I think for me the stakes are higher.
Yeah.
I find that the stakes are higher now. It's not like when I was younger I had the option of working and trading can go to can stay.
Yeah.
But now I'm doing trading as my full-time job, main job. So it is important for me to produce some results.
Yeah.
So with regard to strategy, I feel like a strategy has to keep changing throughout, just throughout to fit whatever is currently
market environment
is happening.
And
Then also to fit your mentality, your mindset, your thinking. Because you'll find, for instance, I had this problem where a candle is not fully formed.
Yeah.
It's still
Forming. And you're in.
No, at that point, you're thinking it will do this.
Yeah.
This is what you're thinking.
You want it to do.
Yes.
What you
You're
want.
thinking this is what it will do now, because it has already started doing it. Will do that. But this is not a candle which is not fully formed.
True.
Then you make a decision at that point when it is still developing. At that point, it suits your thinking.
Yeah.
And then you make a decision, basically take a trade one way or the other.
Yeah.
And then it actually continues your way for a bit. But by the time the last 10%, if it's a 15-minute candle, the last 3 minutes,
4 minutes
or 5 minutes, like then it changes direction
Completely.
entirely. And by the time
new thing.
by the time that candle is complete, it's a totally different candle.
Yeah.
It's a shooting star or something.
a new trade idea.
It's a new trend idea, and then you're already in. So like these kind of things, thinking of when do you make a decision? So like that, put it in your mind and stick into it. That a decision can only be made after this thing is complete.
Yeah.
I don't know whether you guys have that challenge, but I used to. I used to have it a lot. I wouldn't say I don't have it, but I've reduced it significantly.
Okay.
So
And was that due to many losses?
That problem, I think, also comes from the fear of missing out on that move which you are anticipating.
yes,
That's why you just can't wait for that 4 or 5 minutes for the candle to close. So you enter the market because you fear, hey, if I wait for the next 3 minutes,
Then
this market will easily go and
Exactly.
take profit.
And sometimes
And
you're
then-
left by
Yeah, and sometimes you're
Some
left.
It's true.
situations you're
Exactly.
left.
It's
So-
very true.
Yeah.
and the
Sometimes
thing is,
situations the
also,
markets
let's say
will
like
lie.
you're waiting for a pinball or a shooting star to close. So you, like what Francis was saying, you know this is the way it's going to close. Already know. Then now you're like, if I take here, it's earlier than where it will close.
Yeah.
You get my point? Like,
yeah.
I'll have a better risk reward.
Exactly.
Oh, so
Mawongo
you're chasing
too,
a
you're
risk
telling
reward,
yourself,
exactly.
I'll enter early. Before it closes, it'll close up here. Let me enter here.
Now,
So
your pin bar doesn't form.
Exactly.
True.
And these things play out in all time frames. It doesn't matter the time frame. It could be a 4 hour, it could be a 1 minute chart.
Yeah.
true,
But
true.
it's the same thing happens.
Yeah.
Same thing happens, just the frequency of it. So when it, with regard to your question was on
Patience.
patience and psychology and stuff. So I would say this is what I've been developing and I've developed over the last maybe 2 years or
Okay.
1 year plus.
So
And
working on your demons, basically.
Yes, working on myself really. That's really my, because I think I have hammered down on strategy. My strategy works for me.
Okay.
I am able to identify those pullbacks and
Yes.
act on them.
Yes.
I'm able to identify continuations and act on them.
Yes.
The strategy is on point.
Yeah.
It's actually very much on point. I love my strategy. It was never always on point. It has
You
grown
had
to be. It has grown
Work
to
on
be.
it. Iterate.
Yeah.
Mm.
But still, you find I am having challenges, and so I'm asking myself now with the reviews and stuff, what are the challenges? What are the challenges? And I find it's not always about your trading. It's not about necessarily about your risk management. It's just you.
Yeah.
You as an individual. And that is like, for me now, if I was to tell your traders something, it's just that will be like the biggest challenge you'll ever face.
Yeah.
Yeah.
And
That-
probably the
Managing
hardest.
yourself.
yes. And not probably, definitely the hardest. Yani. Like,
Yeah, true.
to be able to master that. And I want to imagine after you're good with that, you'll find trading to be more enjoyable.
Yeah.
Because before then, you're wondering what is it you're doing wrong. You're following your risk management. You have followed your strategy, and you're wondering what is wrong. Why is it not working? But now the thing is, and now this I think a challenge is our market.
Yeah.
In other markets, you find they have maybe, for instance, performance coaches, psychologists,
Yeah.
True.
people who help traders specifically
Map out such.
with these kind of things. Yes.
Yeah.
Psychological problems.
There is one I follow on YouTube.
Yeah.
She charges for fees I don't pay, but I follow the free ones.
That's her
So,
name.
but for the free ones, when you hear what they are saying, you find those are the actual challenges you as a trader face on your own, without speaking to anybody.
Yeah.
But now those traders in those other markets, they have this person who can help them track really what is in your mindset that is affecting your performance. And with that, they're able to track and improve on that performance.
Yeah.
But now for Kenya, for instance, where will you go? Do you have
Like we don't have like great psychologists in this field.
No, we do have great psychologists in Kenya, just not
Yeah.
in
people
this
who
trading.
help
in trading.
well
Trading
performance.
psychologists.
Yes,
Yeah,
yes.
yeah,
We
true,
just
true,
don't.
true.
So we are forced now to work with these
Books.
books,
Videos.
videos and stuff. But it would really be helpful. It would improve the process
Yeah.
Yeah.
if we could have such people
In the market.
in the market. Yes.
And,
So
and
You think psychologists should try and focus on understanding trading more and try to find an issue? There's a business there. That's what you're trying to say. In the next few years, someone will.
There is a market for performance.
Yeah.
Performance coaching.
Coaching.
There is there, because performance coaching is not just on trading.
yeah.
It is on everything.
Yeah.
And I don't mean motivational speakers.
Like your house, yeah.
Yeah.
Like
there
people
is-
who'll give you tips and tactics.
There is a guy, I'm forgetting his name. When I remember the name, I'll tell you guys. But this guy was a performance coach for a football team, and it transitioned into trading. A professional football team, but transitioned into trading, and is a very big now performance coach. He has a book.
Called?
I'll find it for you. Can just chill.
Okay.
So
Yeah.
these kind of people, I read that book. It's a very good book. I'm sure you've read it. I read that book, and it is the experiences that we face. But now these are the ways now I've been able to
Is
to
it
know
Mark
the
Douglas?
problems that I have, and now you're trying to
Tackle
work,
them.
tackle them. Yeah.
Okay.
Is it Mark Douglas?
No, not Mark Douglas. Not Mark Douglas.
Someone
Steve Ward.
else.
Steve Ward.
Okay.
Steve Ward. Steve
High
Ward.
performance coaching.
High performance coaching. Yes.
That's the book.
Yeah,
Yes,
yeah,
that's
that's
the
the book.
You've read it, eh?
Yeah, I've read it.
So the psychologist I follow from Australia, she's called Mandy. You know her?
Yeah, you told me about her some time
Ah,
back.
I told
Yeah,
you. Yes.
Yeah.
She's really good. I
She's
find
on
out
YouTube.
she's on YouTube.
Mandy, what, or just Mandy?
Mandy MPX or something.
Okay.
She's on YouTube. I find her videos because she works directly with traders. I find her videos to be very relevant
Yeah.
for a trader, especially if you're at that point where now you're just working on your psychology. Because I don't think you can, or rather, at least my experience was, I never started working on my psychology and performance until I was okay with my trading.
Yeah.
Because I don't think you will worry about psychology when you're not even sure of what you're doing.
Yes, that strategy in line. If you have not
Yeah.
understood such things, psychology is still not on your
Yeah.
on your radar.
And now, according to your strategy, the way you came up with it and all, so did that help break down now to come and know what to trade, like the markets you're trading, the pairs you're trading? How did you come to, and why do you trade them? Those specific ones that you trade.
Okay, good. Actually, yes. So yes, I found you cannot trade everything. Before,
True.
previously, I used to have
On
like
our watch list.
I used to have like 20 trades.
Pairs.
Rather 20 pairs of instruments I'm looking at. I have currencies, the golds, the metals, indices, commodities. I used to trade soybeans. It was a big thing for me.
Serious.
Big thing.
Yeah. It was a big thing for me. But I realized I cannot, because every market is huge enough for itself. Like, unless you're really big, I think, unless you're managing a few billion, you're Goldman or something,
Yeah.
then you need to put 2 billion on soybeans, 2
2
billion.
billion somewhere.
You still have a few left. You put them on something, on coffee or whatever.
Yeah.
But if you're just trading the kind of money we are trading, even if you get to $10 million or even 100 million,
Yeah.
you can still work just on one market.
True.
So with that realization, I narrowed down my markets to the markets that I performed best at.
Okay.
Yes. So I eliminated a lot of the currencies because they are good, they give you returns, but they don't work with my personality.
And you also said they are slow.
And
Very
they are-
slow.
Yeah.
Yeah. So I just narrowed down to two things. I trade the Nasdaq and DAX.
Oh, serious?
Yes. Just
Nasdaq and DAX only.
only. Like, it's very rare for you to find me trading currencies. There is a situation I found myself where I'm forced to trade some currencies. So that's the only
Times you'll break that.
time you'll find I'm trading currencies. But it's only for a time, which if I do that, if I'm done with that, then I'll just revert back to my usual
Markets.
market. Yes.
And what was that realization that you came to know that I'm trading a lot of stuff, I need to reduce it?
Being not knowing, you find it's really like now, for instance, with Nasdaq. I know what it is doing. I know everything that there is to know about Nasdaq.
True.
But if you ask me what pound dollar is doing today, I have no clue. And I do not have the energy to keep following up on pound dollar. I follow up on dollar yen. I follow up on oil, and I follow up on gold, or because I find each instrument is unique.
In its own way.
And if you learn that instrument inside and out, like truly, like just go through it, you'll find with time, you see that instrument, you just know what it is going to do.
Okay.
Yeah.
Like it's just a thing. Because even with trading, as much as I'm saying I use moving averages and I have all this, I have MACD, the real turning point, decision maker, trigger is usually just the candle.
Yeah.
I'm looking at the candle itself, like the candle, plain, without necessarily these other things.
And it tells you everything.
And that candle will tell me what direction I need to go.
Yeah.
That is like, so MACD and moving average, they like offer context.
Confluence.
They just offer context of what my candle is saying.
Yeah.
But the real trigger of whether I go long or short or wait is usually what is the latest candle saying,
Okay.
and in relation to maybe the other previous candles, and now offer a bit of context around maybe fundamentals slightly,
Yeah.
but usually just technical, and now that is what helps me make a decision.
And with your experience, you found that candlestick holds significance.
Yes, actually, I think it's Ken. We were talking about it sometime
Okay.
about how even at some point I would have the Ichimoku and
Kinko
I have stochastics and I have RSI.
But most traders have passed through that journey. Like before you
Started
decide
there.
on-
You're not really a good trader, or you've not done your research. Kama huja trade na hizo vitu yote.
Exactly.
Haujajaribu bado hii
You need to
game.
understand. Yeah, you need to understand. Like, as let's say you're having a trading conversation. Like when you listen to Ichimoku, are you familiar with it?
Exactly.
Imagine you are 5 years into trading and you don't know what an Ichimoku is. Like that knowledge is important, but you don't need to use everything you learn. The problem is when you start, you want to use almost all the indicators you learn. You learn MACD today, you're going to try it.
And you assume that the more
You're trying
indicators,
it.
the better you will get predicting where the
true.
markets will go.
Yeah, that's a
Ichimoku works. It works for some people.
Yeah, it works. Exactly.
All these
All these
indicators
work
work
for
some people.
work for someone somewhere. Yeah.
Yeah.
So anyway, I have a question. So when you've decided to on a trade, on a trend setup, how do you approach position sizing? Because I've heard that you have huge sizes. So how do you approach that?
In regard to risk as well, Ama?
Yeah.
Okay.
So it's not so much. It's at the end of the day, it's just what am I willing to lose? That's usually just the question.
Yeah.
And the number is usually 1%,
Mm-hmm.
but I'm giving myself an allowance, so it can go up to 2%. But beyond 2%, it's just unacceptable. I cannot go beyond 2%.
So you use fixed stops.
Relative stops from 1% to 2%, because I trade short term. You find if for sure it crosses that 2% level, then it's I'm no longer willing to play in that market, or maybe I'm wrong. But
So it's an automatic close.
yes. But if you've entered a position, you've given it a bit of space. Usually give it 15 pips, about 15 to 20 pips. Literally, actually, that's usually my stop loss. 15 to 20 pips. Yes. So if I've given it that space, after the 10th pip negative, it's, you see, like I could even be on the minute candle. I'm looking at the candle which has formed. If it is saying something different from what I was thinking when I entered the trade, chances are I'm wrong. But I still give it a bit of space, because with markets, you could let's say, for instance, it's a reversal you're trying to follow, but you've entered a bit early. Because I've learned with reversals is that this will be the clear reversal. Like it's clear. It has come, it has bounced the first time.
Yeah.
It did not go, it came back to the same level. It has bounced again. It could bounce again and go, as you would wish, or it could come back, cross that level totally, and then now go back.
Yeah.
And then now go back. So usually that is what I'm looking at. What is the behavior? And this comes with having been on one chart for like forever.
Experience.
You know exactly what that chart does.
Okay.
I want to imagine that is what it always will do.
Okay.
So, and now either of two things is going to happen when it crosses. It could cross and go on, such that level was not truly the level that needed to be held.
Yeah.
Or now it could go back. So I'm only giving it a bit of space to allow for that sort of volatility. Because I don't know whether it's the big banks or whoever. People, there is a lot of that where just,
especially
like liquidity is being sought. So you'll find that level, there are a lot of stop losses just below there. So those ones will be knocked out.
So you always have your stop, not where everyone has theirs.
Yes, I'm always trying to think, what will the big banks do?
Okay.
In fact, that's usually a very big consideration for me.
Yeah.
What will the big players do? So like you're looking at a market and you're thinking, what will retail players do? They'll put a stop loss here. They'll put a stop loss around round numbers.
Yeah.
They'll put a stop loss around levels.
Key levels.
Yes. So those are the things I'm looking at. Because even one of my I don't use it a lot, but I still do. Like there is a strategy called bounce strategy.
Bounce.
Just a bounce strategy, where if a price comes down to a round number, 15,000, even without thinking.
You're buying.
Just buy.
Yeah, I've seen that also.
Yeah. Like just buy. Don't
Quarterly
even.
levels, yeah.
Yeah.
That's
Okay,
quarterly
okay.
levels.
Yeah, as in just buy, and it will go for 20, 25 pips. Then it will now come back and.
Even
But you
break.
don't buy it on the second bounce. Just buy it on the first bounce.
Yeah.
And sometimes that strategy works like magic. You wonder like, but
What's
usually
going on?
when you think
Yeah.
about it, it's because of levels.
Yeah.
You find that is the level where
Stops were being placed.
stops were placed. People expect that thing to go long. So what ideally, as a novice trader, would you do? You'd be like, this thing is going long. I put a stop loss just below this number.
Yeah.
So for that number, it will go below by like 10 pips at most.
Yeah.
If it goes beyond 10 pips, it's going. It's not coming back. So don't stay there.
That's
Yeah.
It's really going. It's going. So you need to get out. But it usually, more times than not, the first, unless the really bearish market, for instance, if it's a short, it will bounce back, go 20 pips, 25, 30. Then it could come back, bounce again a second time. You can even take the second one. After the third time, it will bounce a bit on that level before it decides which way it is going.
Okay.
Yeah. So as to sizing, it's usually just what is my portfolio. So the thing is, I have like various accounts, different sizes. So I usually trade on a very small account, an account with very small numbers, and on that account, I've copied the other.
Same risk
Oh,
parameters.
okay.
Yes. So
Yeah.
so the copying of the trades is just by balance. So it computes how much in terms of size it wants to put.
And which trade copier do you use?
Social trader tools.
Oh, I think I've heard of it.
Yeah, it's pretty good.
So like,
But I'm beginning to have a problem with it in the sense that sometimes, like for instance, yesterday I had a situation where
Yeah.
I had two trades. One was right, one and another one was wrong. So it got the wrong trade and did not put in the right trade.
yeah.
So like you wonder why are you in a loss? Because at the end of the day you expect to be
Yeah,
positive,
yeah.
let's say 2% or whatever. And it's apparently it did not copy the second trade. But now that happens when you're scalping and you're moving very fast, or the market is moving very fast, because what usually it has a slippage maximum.
Oh, okay.
If on the original account price was a certain number and you've put in your slippage, usually it's 5 pips. It has gone beyond that 5 pips, it will not take that trade. It will assume. So yeah. So those are the kind of problems that are
Some
there with
disadvantages
that.
of using copiers.
Yeah. I think it's that particular copier. I don't know whether others have the same problem. But that particular copier, I have that problem with it. Yeah.
With regards to risk, like Lawi was asking, how do you handle like a series of red days? So you have 1, 2, 3, 4, 5 red days. How psychologically accounts? How do you change your trading? How do you adjust to such days?
It's obviously very tough. Losing money is not a good thing. It affects your core. Like you feel terrible.
Yeah.
Kwa spinal cord kwenyewe.
Yeah.
Even with experience, you still feel.
Yeah. Losing money is losing money. There is nothing like good losing money. Losing money is just it feels bad.
Yeah. The same way like making money
Feels good.
Yeah. Actually, making money does not feel good. Thinking about it, not necessarily.
Yeah. But
Not the way losing money feels.
Yeah.
Making money, when you end a day positively, what happens? Okay, at least for me, I'm just okay.
for me,
Like you'll see me walking around the office. I'm just nothing is happening. It's not a big deal.
Yeah.
But losing money is in my opinion, it's much worse than gaining
Making money.
Yeah. But
Yeah,
that has to do with our own psychology, our own
Makeup.
human
yeah,
nature.
human nature makeup.
And it's these kind of things are the things I'm trying to I don't want it to affect me as the way it does currently. So usually what I do when I do such things, at the end of the day for me, I usually, before I leave even the office, the trades which I've closed, I will review them.
So you never sleep with trades till the following morning?
I could, but usually the ones which I've closed,
Okay.
those ones I'll review. So I'll review all of them. And so I will be looking at, previously I used to look whether it fit my strategy. So that's usually not a big deal for me now. What I'm looking at now is what was I thinking when I enter those trades? Like literally, what was I thinking at that specific point?
Yeah.
Why did I make
Enter a
that
certain
decision?
trade.
Yeah.
And with that, you discover a lot about yourself. You really do, because you'll find a recent scenario where I took a trade, went into a loss. And when you look into it, what really happened with that trade was that I should have been patient.
Yeah.
Because the market was just beginning to do some sideways movement.
Yeah.
The trend, the reversal I was anticipating was not really a reversal.
Yeah.
It was a sideways sort of beginning of a sideways move. And my strategy needs as a way to identify that sort of market. But at that point, I did not. And if only I had been patient a bit more, if only I had been patient, I could have not taken that trade and hence not suffered that loss.
Yeah.
Another one is where I took a trade, a good trade, actually a very good trade. And then I was faked out of it. You know, like it has gone a bit.
I get you.
You move your stop loss to break even. And then it comes back to your stop loss, specifically just your stop loss, just for that one. It doesn't go beyond your stop loss,
And
then goes back your way,
Straight.
exactly as you anticipated.
All the way to the target.
Yes. And then now, after like that first candle, you're like, this move, I was right.
Yeah.
So you take another one.
Then
Kumbe, at that point, ilikuwa tu ifike tu hapo. Starts going back. So these are the mistakes. Because ideally, the second trade, I have no business taking it. It's like
So
trying
do
to,
you
it's basically chasing a move.
yeah.
Plus, do you think it's a form of revenge trading, like wanting to get back into that move and still recoup the loss and make something up?
For me, I wouldn't say, you see now, I sat down and really thought about it. For me, what I was actually doing at that specific point, I was still, in my mind, validated on the previous move. I still felt it was right.
For you
And
to
that
take
I
the
had
trade.
exited a bit early.
Because
Yes.
there are times you'll be faked out, take the trade, and it will work out well.
Yes.
You'll make some money.
And so that's what I did. But ideally, you see now, that is where your trading plan comes in. Ideally, I should never have done that.
According to the plan.
According to the plan, I don't do that. I just don't do that. You enter the trade at the point where your plan says, your strategy says you should enter.
Yeah.
If you did not, well, too bad.
Just go home.
Isn't just go home or you'll try tomorrow.
Yeah.
No. So there is that element which I find now I'm developing, where I actually, you see, like they say, trading is a matter of probability or
Yeah.
huge scope. You should.
Distribution.
But I realized previously, I never applied that. But now, because of, I think, being where I am, you find now I truly understand in that element of probability, in that it doesn't matter if you've lost this trade or you've missed this opportunity. It is really, honestly, right now at this point, I truly believe it does not matter.
At the point of one trade, it doesn't.
Yeah, it does not matter. Because another opportunity will come. And for me, especially because I trade short term, I can take even up to 7 trades a day, 10 trades. As in, it will prove it, another one will come within the hour.
Yeah.
Like it's like a bus. It's going to come. So you just sit there.
Itakuja.
Just stay there at the stage. Just stay there. It will come. And the other one will now be right for you. You'll be able to take those trades and make your 20 pips, 30 pips, whatever.
Yeah.
And
And looking at that, just before the main question, you're saying every evening you look at the trades and all that, the review. Do you have a certain routine that you religiously follow day in, day out?
actually, you've just reminded me. You'll repeat that question.
Okay, no problem.
The thing about how I deal with this. So I was saying the way now I've reviewed those trades. Now the other thing I'm learning to do is to forgive myself
Acceptance.
for these mistakes that I did.
Acceptance.
Because previously you'd find you've not forgiven yourself.
Yeah.
You're angry at yourself.
You are angry. You're mad at the market. You're thinking this market walitumwa. They were sent. They were sent for your stop loss. Why did you just come to that stop loss? Why did you not stop 1 pip above it or whatever?
I know the feeling.
Yeah.
Yes, I know it.
I can see like Ken is getting it. Ken is getting it. He knows he has been there. So it's that thing. So like you really just need to. So like you at the end of the day you've reviewed your trades. Now I'm going home. I'm seated there, I'm driving home, and I'm just thinking, this trade, I did this mistake. By the time I get to my house, I've fully forgiven myself. I have forgotten about them. I've really forgiven. And then I think about what else did I do right on the day? Because because there are some times when you've suffered a loss and the trade was probably right. It followed your system. It was fit a good trade. It was a good trade. It just did not go. So like you're also thinking, what did I do right today? And now you take your positives with you. Like truly take your positives and apply them tomorrow. The negatives, forget them. Remember them so that you don't repeat them. In fact, have them somewhere just in your back of your mind. You don't need to repeat this. And then tomorrow come back fresh, meet Kina Kenapo, drink some coffee, laugh, and go into your day without the baggage of the previous day.
Trauma from yesterday.
That's a good point.
Because that trauma, that baggage, that thinking of the mistakes you did and everything, for me, it has been a bad thing. Because you'll find after a bad day, you'll have another bad day.
Exactly.
And if you really think about it, what is it?
It's your psychology.
It's just your psychology. If it's really bad, you can even go away for a few days. Just don't come to the office. Like,
I've had such days.
Just if you've messed up on a Wednesday, come back next week Monday.
True.
And that time off gives you time to, even if you were not forgiving yourself, you'll forget or whatever.
True.
But now
will...
working with it systematically, like analytically, you just need to think about them, because you need to, those things, they show you stuff about yourself. If you really, if you analyze, don't just look at your strategy or the levels or whatever. Think about what were you thinking
when you're doing some things.
Because you learn, maybe you are thinking, I have a debt here, Taras.
Afani lipe.
If I should pay Taras that money.
Riga's rent.
These 20 pips. What is your motivation? These things,
True.
I don't know.
It's
whether
deeper. It's deeper than what you see.
Yes, it's not
really deep.
It's not just your mentality on your strategy, on your trading and all that.
I
found myself that I did actions. I took certain steps motivated by things which have no relation to trading.
True. Like, let me just read this statement by Brett. I think you know Dr. Brett.
Steinberger.
Yes.
Many trading problems are the result of acting out personal dramas in the markets. And you just come with your own personal dramas. And he continued to say, markets and relationships are expensive places to bring our unresolved issues.
True.
I agree. Another thing on that element is that maybe you could have had your problem with your significant other.
Yeah, true.
Kama leo soko itajua.
Then you come trading, telling yourself, madam, anijui.
And Bazoo.
Seriously, who does she think she is?
Some millions up.
And then you just get into your business. But the thing, what I've learned is that you don't know it's happening in your mind.
It's unconscious.
You don't think it is there. You don't think it is going to affect
you.
In fact, at that point, you're telling yourself, fine, I've left it at the door.
Hiyo vitu kwa nyumbani.
But it makes sense. You just check. The days you've had personal turmoil on the side,
Trading yako imesafa.
the day after, 2 days after, 3 days after that news or whatever it is that you faced, you'll have a bad day. And a significantly bad day than other days, than regular bad days.
So I think, the personal dramas that really affects how you perform in markets. Like,
true.
Yeah, they shape how you, like, your decision-making process.
True.
Because you'll come to the markets making decisions at maybe your mentality is stressed. So, like, you won't make that rational decision. Maybe a trade that you was supposed to wait for a candle close, like, your brain is already
Faster
than like how you should be acting normally, like on normal events when you're not stressed, maybe not angry at someone. You see, like, from an argument, your body is active, and you see that, like, that activity, it goes to your brain. When you come to markets, you won't have that patience to wait for that candle closure, and that's what you are saying.
Action.
And you trade and the candle inafunga as a very, very big bullish engulfing candle, and you're waiting for a shooting star. It really affects your trading, but you didn't know it affects your trading.
And the thing is, with other careers, you could live with those kind of dramas.
But
true.
in trading you
Trading
can't.
you can't.
In trading you can't.
It's where I was working before, I could have as much drama on the side as possible
And still manage to do
and
work well.
still do my job, be the best finance manager that there is, and do my job. But that shit, you bring it on board to trading,
it will mess you up.
The effect is on your P&L. Like it's clear.
Yeah.
You can just ask yourself, what happened on this day? Like if you go through your P&L, you're just thinking, what happened on this day?
Because
There is something that
if
happened.
you look, like you were saying, I also now agree with you. I'd not even thought about it that way. But I've been doing the Van Tap peak performance course. And anytime I just go through that thing, I always ask myself, the average person is not taught some of these things. Like you'll never encounter them if you're not maybe in trading or where you need to
That
at least make your mind to some levels, yeah? And some of those things are like automatic responses, like what you're saying. So you have responses which are just automatic. You don't think about them, but they just happen.
your neural pathways.
Exactly.
They're
They're already
Exactly.
established.
Yeah.
Like that, tukiargue tu na Caleb, kuna wires tu zinashikana mahali and certain patterns form.
True.
You get?
Yeah.
So if you think about those things, you really need to understand your decision-making strategy for you to break some of those patterns. And he talks about you understanding whether you start from a visual perspective to a feeling perspective to a decision, or you start from a feeling to a visual to internal dialogue. Like there's a whole process that you use for you to make
And
decisions.
for different people, it's different.
And for different people, it's different. That's why I can't help you. You have to help yourself.
It's true.
I
You have to
help
learn
myself.
yourself.
Exactly. You have to learn yourself. But when you learn such things, I think those things are very, very powerful. And another thing that I think I've learned is that some of these things are skills. They're not things that you're born with. They're skills that you acquire over
Along the
time.
way.
Exactly, over time. Because anytime now I make a decision, I try to frame it in that framework. Like, where did I start all the way to making this decision? Was it automatic? Is it something that I even never thought about, but need to make your decision? Or is it something that I thought about, had this, the dialogue was like this, what were the side effects? Like, there's a whole process towards doing that.
It's that dialogue in your mind.
Yeah.
You need to know when you're making trades.
Exactly.
What was it that you were thinking?
Exactly.
It's how I
The
frame it. in my
self-talk.
mind. Yes.
Yeah.
The self-talk. What was I thinking? Why did I do this? Then you have that mental note of, I did this because of A, B, C, D.
Yeah.
Now, when you're not in a trade, you're free to think. So
Yeah.
you check whether this A, B, C, D
Was
fit your
criteria.
plan or your strategy or whatever.
Yeah.
Which I find now trading is a good area to be. Like you see, what you're saying, the other career, you could continue living with that. Now in trading, you have to work on it.
Yeah.
There's no other way. You're aware of it. You have to face the truth. What Ken is saying, accept it and work on it. Other careers you can live, continue to, which is a good thing. Now helps you improve, become a better person.
Yeah.
You'll see the reward. The feedback will come straight from the markets. A mistake you used to do, you've stopped making that mistake, meaning you're a better person than you were yesterday.
True.
So I think it's a good thing.
It's true. It's true. I think the only other people who face these kind of situations are sports people,
Athletes. Yeah.
athletes. Usually I think athletes and I think surgeons.
Yeah.
People who have to do something. Performance, physical, coordination, something like this.
Like your result really matters. It's
Yeah.
just- Like as a footballer, like how you play really matters for the team. Like you just can't go to the pitch and just be there. You see, like you really, really have to perform for the team to progress.
For instance, with regard to, like, let's say, for instance, footballers,
Yeah.
you can imagine, like I admire a lot of athletes. You can imagine, and it's not just footballers, even like regular athletics,
basketballers, yeah.
the elites and the likes.
Kipchoge,
Yeah.
The Olympics and
You
all.
can imagine this person is playing. It's a Champions League final. You've played up to that point.
Yeah.
You're in front of 90,000 people who are seated around you and shouting and
Yeah.
screaming.
Yeah.
Half of them want you to succeed. The other half are making sure that you don't
Don't
succeed.
succeed.
And you're there. You're supposed to take the last penalty,
Yeah.
and you're supposed to, like, concentrate on it.
On
like,
it.
like
There's a lot
at
of
that
pressure.
point, you don't need to remember what happened with your coach,
Yeah.
what happened with your fellow players,
Maybe the last
what happened with your last
penalty
girlfriend or whatever, what happened with the
in
last
the moment.
penalty, and how
yeah.
good is the goalkeeper ahead of you.
Yeah,
The person you're facing is probably the best goalkeeper in the world.
Yeah.
There is no better goalkeeper. And you're thinking, how do I be this person? You know?
Yeah.
So, like, that mindset, I just wonder how they go through it. At that point, just before they start running, what is going through their mind? You know, it must be like, I don't know, or Usain Bolt on the final of the Olympics.
Yeah, like
You're
the new
supposed to
guy.
run for like 9 seconds.
Yeah, 9.58.
Like Elliot trying to break the 2-hour limit.
Exactly.
Yeah.
That's
Again and
another
again.
one.
It's
Yeah.
a battle.
And everyone expects
You have to push yourself.
People are waiting.
And then with running, I don't know whether you guys have ever run. Like running, there is a point you get tired and you're done for. Especially that one for Kinailud. Those people are just like seriously mentally tough.
Yeah.
True.
Because I've run
That's
10 kilometers in 1 hour. So like it means if I was to run the marathon, I'll run it in 4 hours. They do it in half the time.
And 1 hour is fast. For 10 kilometers, that's fast.
But then that 1 hour,
Yeah.
I ran for 2 kilometers, stopped,
Yeah.
walked a bit.
2
Ran for
kilometers.
another 2 kilometers. There is a point there was a hill. I walked the entire hill. So these people are running
Now
and
stop.
continuously. And it gets to a point when you're running, yeah. As in, I'm not a proper runner. I've even stopped by the way. But when running, it gets to a point your body just refuses. Like
Nakataa kwenda.
I was reading a meme yesterday which was very funny. When you run for the first time. this one got me. Your heart is asking you, do you stop or I stop? Like either you stop or I stop. Which one is going to happen? So to convince your body that it's okay to continue, it requires some mental toughness. Yeah.
It's tough, yeah. So I was asking about the routine.
Yes, whether I have a specific routine. Yes, I do.
And to add on that, I'll also ask, not only for the review, but also for your trading.
Yeah,
I'm
yeah.
aware
Yes.
you don't have empty phone, your phone. You don't believe you should keep on checking your trades everywhere.
I do have a plan. Basically, it's a trading plan. Like it covers everything around my trading.
Yeah.
And the idea is to just have some regularity, some repetitiveness to it, which my hope is that it helps improve my performance. So it has to do with the time I wake up, my activities when I wake up, the time I get to the office,
Yeah.
the time I have breakfast, what I do when I get into the office. Immediately I get into the office. Then I trade the London session. So by 9, I should have been seated.
Okay.
So between 9 and 10, I'm doing my pre-market thinking.
Yeah.
Just putting myself in that mindset of I'm about to start trading.
So you don't trade pre-market?
I don't trade pre-market. Unless I have trades from the previous day, I'm just checking where they are at that point. But
And this time you're focusing on the 2 pairs you told us.
in fact, now before the London Open, I'm only focusing on the DAX.
You're not even focused on
I'm not
Nasdaq.
even focused on Nasdaq.
Okay.
So I'm looking at what are the potential news coming affecting DAX that day, or companies related to DAX, but mostly just DAX as a whole. I try not to go into the specific companies because I cannot manage.
They have 30 companies, I guess.
Yes, 30 companies. Then the other thing I check is, so essentially, I'm trying to put myself in a mindset of trading. I'm trying to make some visualizing what I want to do. And I found this to be very helpful. In fact, the days I do that properly, I follow my plan properly, you find that I'm profitable. Because in that time you're thinking about because my strategy is a bit, there is an element, it's not set in stone. It's there is an element of my own bias, and it's what do you call it?
Yeah.
When it's just you deciding at that specific
Discretion,
time.
yani.
Yes, there is a lot of discretion involved. So I'm visualizing those setups. Like if you see this is what you do. This is where you put your stop. This is where you this is where you take your profit. If it does this. So I visualize this, and by 9, I have a bias of what I anticipate. I try to make sure that bias doesn't affect my trade, because if you have a bias, it could make you not take trades which are like self-evident.
Yeah.
True.
So
So
you're
you're not fixed on the bias.
Yeah, you're not fixed on the bias. You have it, but you're not fixed on it. You're trading what you're seeing. So these things which you need to make sure so that you don't make mistakes. That element, that 1 hour before the market opens, is very critical for that.
So you're mentally rehearsing how you're going to do
Exactly,
things.
you're mentally rehearsing what you're going to do. So 10 has come. Immediately you're either in opportunities or not.
Okay.
Whether do you get in on because sometimes you can find an opportunity which was developing 5 minutes before the market opens. Market opens, volume comes in, it just fits into that and it goes.
Yeah.
And it could go for the rest of the day.
Yeah.
And I find that sometimes with DAX, I love opportunities within the first 2 hours of the day, and they're enough for me to even close the day. If I chose to, I would not even trade in the afternoon.
Yeah.
So it's those because it's only like 2 hours. You have to make sure mentally you're there. So I do that, and when the market comes, take my opportunities, the ones I can take, either they're in profit or loss. It's fine, doesn't matter, provided you followed your rules. You haven't
Breached your rules.
In terms of especially the level of loss, maximum loss per day.
Yeah.
So you try to leave enough space. If, for instance, you're just making mistakes, as in you're just out of sync with the market, there are times you are.
Yeah.
You find you're identifying opportunities just after it has finished. Then you take it goes the other way. By the time you get to that point where you're realizing it's wrong, you're trying to go the other direction, but that move has finished. So when you're out of sync, you need to identify that very quickly so that you don't do it a lot. You just get out. Then also just know what kind of market will develop in the day because now with DAX, enough times you will just you could potentially get a move for the day between those first 2 hours. A move which can make you good money even for a week.
Yeah.
Because if it breaks out one way or the other, up or down, doesn't matter, it could go up to 2 in the afternoon. And that could be like 100 pips, 200 pips, 150 even. So it could really make your day. So you don't want to miss that. Because it could be the move for the month, which will cover all the small losses
that you have.
You occur in trying to get other moves. So I've realized when you take your moves when you can, when you don't hesitate too much, you just take them, then you're good. So I do that. Then come the afternoon, I do the same again from 3:30. I'm just preparing mentally.
Now for NASDAQ open, for you.
NASDAQ open, yes. If you have trades from the morning where they are, because you'll not be able to concentrate with them. The European market is also affected by the US open, so you also need to be keen if you have trades on.
Okay.
Yes. So when the market opens for the NASDAQ, repeat, do the same. Again for the first 2 hours, but for the NASDAQ can go up to 7:30, maybe 3 hours. So from there, it's just winding down now. At that point is when you start thinking, do I close some? Which ones do I leave? Isn't based on why you took them. Because for me, there are different reasons why I take trades. Like now, for instance, the way I was saying, the bounce sort of trade strategy. Those ones I don't hold for long, so those ones you leave. You cannot. Rarely will you develop a long-term trade from a bounce trade. Yeah. Yes. So like longer term, and by longer term for me it's just a day or two. By longer term, it'll probably be based off some moving averages, convergence. They really came tight. They started moving. The thing is still valid up to that point.
Yeah.
Probably I've already moved my stop loss to break even, so I'm comfortable leaving it. So I could just leave it for the rest of the day if I feel there is space. Yeah. So at the end of the day now is where I'm reviewing, because I don't want to have that to do that in the morning. I will have forgotten why I did it.
Okay.
Or I could have. It's not as at the time when I'm closing the day. Memory is still very fresh. I make a few notes on what I need to carry forward. I basically note, did I do good or did I do bad?
Okay.
That categorization. Identify the good, the bad also.
That's a good strategy.
Yeah. Like literally in terms of psychology wise, was this a good
idea,
decision, a bad decision, evil? Then you know that. Then tomorrow in the morning when I'm reviewing, before I start the day, I'm looking at the bad things I did yesterday.
Okay.
Yeah. So at that, when you wrote them down, they're like very fresh in your mind.
Yeah.
And by fresh, I mean in terms of even the setup.
Yeah.
You can see exactly in your head. You can see this image of that setup at that point, the situation, how it was.
Okay.
And even for the good, you remember. So if you see this, then definitely this is what is going to happen.
Okay.
And does this move for now? Just to finish on the routine on the weekend.
Yes. So for the weekend, it does that. I do that until Friday. So for the weekend, usually I come in to do my admin work. Like it's still, but I must come in. I have a bit of admin work I do. I do my admin work. Then I do reviews for the week. There are certain, my broker, for instance, they have a calendar for the things which are coming for the week. and they have opinions, I just listen to them. I don't let them affect me or
Okay.
make my decision. But it's just good to know
What's coming
what
up.
other people are thinking,
Yeah.
especially with the forward-looking statements on. If it's maybe for instance the DAX, there is what do you call it? There is that purchasing managers index for Germany. It's a big deal for DAX. So you want to hear what are their predictions, and based on that prediction, so you're in your mind in the course of the week when that thing comes out, you know if it comes out this way, generally the accepted thinking is that it should do this.
Yeah.
Or it should do that. But for me, because I'm a short-term trader, I don't let those kind of news affect me.
Okay.
Because with the bigger people, banks and stuff, they price these things in even before those things come in.
Yeah.
So you just want to trade what you can see at that point.
True.
Price action.
Price action, yes.
Okay.
Yeah.
Okay. So since you're also trading on a prop farm and you have some experience trading there for a prop farm, I think you've done it for some time now. There's some few questions I had for you from that side.
Yes.
So one is, any tips and tricks for people who want to join prop farms? Like, what would you advise them? What do they need to focus on?
So, prop farms are a different kettle of fish. In one thing, most are offering money where you cannot have a drawdown of more than 10%.
Yeah.
My thinking is that 10% is a very tight drawdown, to
Yeah.
be honest with you. Because in the market that we trade, and given the return they also expect you to make in that period, it's literally 20 days.
Yeah.
In 20 days, they expect you to make a certain percentage. Then it means you'll have to enter fairly sizable trades.
Yeah.
Because you might have, for instance, a situation where you're being given 20,000. You're expected to make 20,000 and a maximum loss of
10,000. No, 20,000.
20,000 or so. But if you start wrong, it
That's
means
it.
your work is just doubled. Yani.
Yeah.
Your work is just increased. But the main thing I can advise people is one, you need to make sure your strategy works.
Before
don't jump
going
in.
into them.
Yeah, no need to pay, because there are certain prop firms. I think even one owner of one of those prop firms said for them, they don't make money off at you've succeeded, so you're making money. So no, the money they make is off these fees people are paying to try to be traders.
Traders.
And if you succeed and you make money, they'll just pay you off these fees.
Yeah.
There is no real account. So there are those. So a lot of these prop firms make a lot of money from these trials. So you just need to be keen on that.
Yeah.
So when you go into this, ensure your strategy works. Just that is just like the bare minimum.
Okay.
You will not go to experiment there. You experiment there. You cannot learn there. That's not the place to learn.
True, yeah.
You need to learn on the
your
side
own accounts, yeah.
or on your own account or whatever. Once you feel your strategy works for sure.
Yeah.
Because if your strategy works and now you're in the right mental space, it will not work even if you're not on the right mental space. Even if it's a good strategy, your mental space. So by the time you are saying that your strategy works, it means also your mental space is good, your mindset is good.
Yeah.
So that is like the bare minimum that you need to have. Then the other thing is with these prop firms, you cannot go there trying out stuff. I'll not go there to try to enter bounce trades or whatever. Or some other bounce trades I do.
So you don't experiment.
Very,
there.
You don't go to experiment. I can try those things on my personal account on a smaller size because it will either work or not work.
Yeah.
And on out there I can apply my thinking, which is then you need to take risk to make money at the end of the day. So if I don't take that opportunity, I could be right or wrong or whatever. If I'm right, well and good. If I'm not right, it's also well and good. So there you cannot go and do such stuff. You need to stick to your plan. Like really just, you've tried your plan, you've confirmed that your plan works on the side. Now once you've done that, when you go there, that is the plan you have to stick to. You don't go there to try out or to experiment or to enter trades by mistake or be affected by your mindset. Because if you do, that will also be the end of it.
Yeah.
Because you have very little room for mistakes.
You're making business for the farm.
Yes.
Exactly.
Yeah, you have in
little
fact
room.
there is no room for mistakes.
Yeah, true.
There is literally no room for mistakes. But I've found, so like I've come to, I think there are certain firms which literally actually want traders. Forget these ones which want to make money off
The challenges.
challenges. No. There is, for instance, one I know where you don't even do the trials. They give you a criteria and you just start.
Mhm.
Pay a small fee, start. Small amount, start.
Yeah.
But they scale you up very nicely.
Mhm.
I have found that to be a very good prop firm. And probably, in the end, probably will be the one prop firm I'll remain with.
Yeah.
Because them, they are literally interested in your success.
Trading, yeah.
They're not putting dance moves or whatever, you must do this, do that. No. Then they're also minimizing what you can do on that platform. Like there is a maximum lot size. You cannot go there entering lot size 20 and your risk percentage is only 10 pips.
Yeah.
10% or whatever. So for you to move from one level to next, by my computation, you need at least 300 pips of their maximum lot size which they have offered you. And given that you won't use that, it means you'll have to make up to 600, maybe even 1,000 pips
For you to move.
for you to move to the next level.
Yeah.
And if you're making 1,000 pips, your system works.
Yeah.
Your system works. And then if you do that as they would, they double your allocation up to a certain amount, which is a very significant amount for a regular person in Kenya to use to trade. Like, and having grown from that level to that level where you're given that maximum amount, where they double you after certain benchmarks, you hit certain points, for sure you'll be a good trader. That is somebody who is looking for somebody they can work with for like a long time. Because these others, you find there are caveats. They're not. They're allowing you to do some very crazy stuff, and knowing like most traders, they're not that disciplined.
Yeah.
Of course, yeah.
So they'll try stuff which is not necessarily helpful for them.
Yeah.
Yeah.
And in terms of these prop firms, for the people who are listening, are there specific ones you could recommend for people to go use, and how
Yes.
much they give?
Yes, I could recommend for sure FTMO. FTMO is a prop firm out of Czech Republic, but it's recognized internationally. Like in Denmark, in the entirety of Europe, it's like the best prop firm that there is for retail traders. They offer up to a maximum of $400,000 for
That's
trading.
40 million Kenya shillings.
Yes, 40, 44, 45. Yeah. So up to a maximum of $400,000. And all you have to do is pay for 2 challenges of 200,000 each. If you succeed, their criterion, which is make 10%, then make another, is it 5%?
5%.
Yeah.
Yes, 5%. Within a certain period, then you're given your allocation.
Okay.
And the good thing about FTMO is that their PR, their back office, their customer service is very prompt, very professional.
Okay.
It's
on
legit.
point, okay.
It's really on point, yeah. Then there is another one called My Forex Funds, MFF.
My forex funds.
Yes, MFF. They also very similar in terms of the structure to FTMO. Not as good, but equally, but just okay, sufficiently good. Not as good in terms of just customer service and systems and whatever. But at the end of the day, if you're a trader, what you need to do is to trade. So you need the money and your system. So the system is working. You'll get your money. You'll get paid when you get in. And the other thing is that they're developing. They're newer than FTMO.
Yeah.
So they're developing in terms of their back office. You can see that they're improving every other month in their communications. They use Discord a lot. So for that one, you interact with them via Discord.
Okay.
Yeah. So they're also good. And they are better, in fact, because the cost of their $200,000 challenge is lower than the one for
FTMO.
FTMO. What you're supposed to produce is also lower by 2%. And I think the maximum drawdown is also a bit higher. So in that sense, they are better than an FTMO. And they even offer a bigger maximum amount, which is 600,000. Then the third one is called Audacity Capital. It's the one I was referring.
Audacity Capital.
Yeah,
It's the one where you pay, yeah?
Yeah, it's the one I was referring to, where they don't give you much. You just pay for the first one a certain fee, and then they give you for a start $15,000. You make 10%, you go to 30. Make 10%, go to 60. Make 10% on 20 to 40 for 80, up to maximum of 500.
Yeah.
And every 10% you basically every 10% you grow up to a maximum of 500,000. I've also found them to be good. And then they were, even before prop farms became prop farms, they were still in existence. They are like much older, but they were now doing, like the usual where you go do an interview,
Okay.
they take you in. They were prop farm even before the way
Physical prop farms.
the current structure of prop farms has come before.
Yeah.
Yes. So they were working in that sense. So those are the three I can recommend. I've interacted with to some extent. I'm with two of them. So in that, at least those ones I know. Potentially I'll get into the third also, but we'll see. We'll see how it goes. Yeah.
Okay. So now, since you've told us you've participated in the share market, you've also participated in the forex market, you now trade indices. What do you think about the crypto market? Are you trying to look at it?
No. So the crypto market, it is here with us.
Yeah.
It's not going anywhere.
Yeah.
But for me, I invest in what I know. I am those people who believe that you can never be a passive investor, in the sense that you just don't go and buy shares, for instance, and you let them, and you just let them stay. And I learned that thing the hard way. I had some HFCK shares at some point. Actually, I still do, but
It's like you had forgotten.
no. The thing is, it's like, think about it in terms of our trading. I basically got married to the position. So like it got bad, then it got worse,
And then
and then it got even worse.
Yeah.
Then it gets to a point where you can never sell them. Really.
Really well.
That's how it is. They're now retirement funds. Basically.
Yeah.
So that's the way it is. I those experiences I've just learned, basically you have to be active in your portfolio. If you own shares, you need to be actively monitoring them as to where they are, and if they get bad, exit, do whatever. If you own real estate, the same thing, as in
huwezi jenga
actively.
nyumba
Huwezi jenga tu nyumba na uenje kusema unakota rent. Rental yields reduce.
Yeah.
As in maybe, okay, we're in Africa, so we are lucky in the sense that they are still increasing and urbanization is still going on.
Yeah.
But in the West, rental yields are just reducing.
Yeah.
And even here in Africa, in Nairobi,
That time will come.
with the office market, office spaces,
Yeah,
it is actually reducing already as it is. So if you put up a few billions to raise a 20-floor building, you cannot. So you need to find ways to actively manage those assets. And I've seen that with, like, let's say for instance, like BlackRock. BlackRock is one of the biggest landlords in New York, and how they manage their real estate portfolio is just very interesting. They are very active with it. It's not, you see, like in Kenya, when you build, you're just like,
Nimemaliza.
I'm done. Now this is like retirement plan. People don't view real estate as an investment position you can exit. They just don't. They just acquire and it's permanent.
Yeah.
But that's not how I view it. So going back to your crypto market question, for me, it's not something for me because I don't understand it that much.
Okay.
I haven't researched it, and it moves too fast.
Yeah.
It is too affected by Elon. and but the main thing, the drivers for it, I feel they are not things in my control. They're things I can control. So, and the volatility is too extreme.
Okay.
It's really too extreme. But I regret why I never got into it, because when Bitcoin was coming up, I knew about it. Like when people were mining Bitcoin for the very first time, I knew. Then
That's 2010.
yes, I knew about Bitcoin, and I'm just wondering why I never just bought a few and put them away in a wallet somewhere and forgot about it. Because I was very active then. I knew it was happening. I just did not know how to do it though. I didn't know about wallets and stuff. There were no exchanges then, rather, or they were not accessible to us in Nairobi.
Yeah.
But the thing is, I knew of it. And now seeing the price, you're just thinking, if I'd taken a few at $1 a Bitcoin,
coin, yeah.
But now it's too overpriced for me. So, but I think crypto is just going to be there for a minute, for a bit. It's not going anywhere. I've seen a lot of application of it being done by now regular institutions.
Yeah.
It is under threat in the sense that if central banks get into crypto, I don't know how it is going to exist, because you see, central banks and governments are more trusted than some exchange somewhere.
Yeah.
So if, let's say for instance, Central Bank of Kenya here was to issue some Kenya shilling in crypto, then that's basically it. There is no producing another crypto in Kenya, because that will be the main
Most
accepted
trusted.
one,
Yeah.
most trusted one, because it's issued by
Central bank.
the central bank. So there is that, but it's not a market I'm very familiar or
Okay.
So basically, you believe that the market will actually work
for crypto. Yes, yes.
crypto,
yes.
but not that
Here to stay.
Bitcoin or Ether or Ripple or will be the dominant one. Maybe others will
No,
come.
others will come. Others will come. For sure, others will come. Especially if, the thing is, what is money? Money, there is one element of money which is it must be trusted. So, crypto is becoming popular and all that, but the majority of people are still not in it.
Yeah.
True.
So basically, they've not got it there. But if central bank or some government was to come up and support such a thing, it could very easily just bypass everything that already exists. But at the moment, of course, there are those which are accepted more. The crypto market is very broad. I think you know that.
Yeah.
So, as in there are currencies for all manner. There are
Like
people who launch them every other week.
10,000 coins.
Yeah, there are all manner of
too much.
coins coming up, and that's actually the bad thing about it, because every Tom, Dick, and Harry now wants to produce his own
Exactly.
coin, basically be the first investor, go promote it on TikTok or wherever.
Reddit.
Yeah, actually, that's where they get pumped and dumped, because they get pumped from TikTok. Apparently, in the West, people are getting a lot of financial advice from TikTok. This what is that name of that company? Robinhood.
Yeah.
Robinhood, yeah.
Those Robinhood people,
Yeah.
they are getting their advice from Reddit and TikTok.
And what do you think about these people? You're telling me, like how they're doing, they're killing the hedge funds at some point, yeah?
So, before we conclude on the crypto, so cryptos are here to stay,
Yeah.
and it's just, for me personally, I'm not yet in the market because I don't get it.
Okay.
And for the ones, if you think about it, the market you operate in is so huge.
Yeah.
How much of that do you, as an individual, have you covered? As in, you have so much to do before you can even. So the people who are exploring crypto, if you think about it, you find it's like the endowments in Harvard. They have billions and billions of shillings. They've bought forests in Brazil all over. They've diversified. Now they're just thinking, this thing is for the future. Let's put a few billion here,
Yeah.
And that's what they're doing. So, but for me as an individual, my assets are still very few. I can still just put them on regular things, which I know, and work with that.
Oh, okay.
Yeah.
Okay.
You had asked something?
About the Reddit hedge funds, the new hedge funds.
So what is happening? They're not. It's just that what is happening with Reddit is what happened recently. What was the name of that game shop? GameStop.
AMC.
Yeah, is that people were just being contrarian.
Yeah.
And just being contrarian for the sake of being contrarian. But then they were many enough and with enough money to be able to drive out real hedge funds.
Yeah.
Yeah. But it's, like people in the West, me in my view, they are mad. They are a bit mad. Or they have too many resources. I don't get it. Because would you, for instance, think about it rationally. As a rational investor.
Intelligent investor.
No, rational. The word is rational.
Rational.
As a rational person, go and buy a stock and you're saying you only live once.
YOLO.
YOLO. And this is a stock,
This is the new generation of
This is a
investors.
stock, This is a stock,
Which differently.
Think about it. This is a stock, This is a stock. As in, when you're analyzing stocks, you're looking at their P&L, their balance sheet, their cash flow situation, management, the market where it operates in.
Industry.
This is a stock with everything is bad. So clearly, as in everything for this company, specific company, is bad. But then you and some people think, say like now the owners of the company, they should not just be shorting their company. Let's show them. So you at that point, you're just one person with your $1,000 or $2,000,
And you buy.
and then you go call Taras, and you meet at Reddit and a few others, and you buy enough of you to be able to move the price of that thing upwards, knowing these are companies with a capitalization of still a few billions. It's not entirely a small company, but you mobilize enough of you to be able to push in a different price in a different direction, which is not supported by any fundamentals of the company. Because with companies, it's just fundamentals. Yes. So, as in, you must have a lot of resources to be able to do that. That's my thinking. Because they
like 3 million investors on Reddit.
Yes.
Like on that GameStop.
Yes.
3 million people.
But these are
$1,000.
you should check that thread. Is it why are you investing in this company? Somebody is like YOLO. That's your reason. You don't care for where is the price at that point or what it is doing. No. You just you are passing by threads in Reddit and you're like, we are buying this one today, and that's what they're buying. And they did that with several companies, not just GameStop was the big
AMC,
one, but they did that with AMC. There was a third one also, which was significant.
I don't
As in, for me,
And
I don't
it's
have
the
the
same thing we
resources.
saw on Dogecoin. If you've heard of it.
Yeah. It's the same story.
For me, I'm too rational for those kind of things. I'm too rational, and I'm generally risk averse.
Yeah.
As in, even me, as in the trades I take, as in before I take that trade,
Umeifikiria.
I've done everything that I can. In my head, that trade should work. If it doesn't work, it's a miracle. At least that's the thinking before I get into the trade.
Yeah.
It must work.
Okay.
So I cannot do that just because people are doing that.
Yeah.
But there is a, what is it being called? Sentiment investing. It's like a new field or something.
Analysis, you have seen something.
A field where even now the big hedge funds are putting in resources into doing research for sentimental investing, where people are investing just based on sentiment, not necessarily the fundamentals.
and trending stuff.
Yeah.
Yes, just what is up today. What
There was
are we doing?
actually a guy on the New Market Wizards book who trades like that.
Yes.
So he had developed a tool for identifying social trends on social media, Twitter, and then he'd do research and then buy the sector. And he was making good money.
No, I think that is still rational. That is just still very rational. It's a very rational thinking.
Yeah.
Because what you're doing, it's like these headphones. They have a very good name. Audio Technica, yeah? It's a big brand out there. It's a very big brand. So this person, what you're saying they identify, you see these companies, especially for instance, the headphones phenomenon.
Yeah.
As in they've just started small, but headphones now, there is a whole segment with $1 billion market. So this person was identifying that young people maybe are starting to buy Beats or whatever.
Yeah.
And
That's the trend.
that is totally rational thinking.
Yeah.
It's
This other
sentimental,
one is not rational at all. You know this company is doing badly.
But
you
buy it.
know people are no longer buying those hardware stuff. You know that the management is not the best in the world. You know it is overpaid, and you're still thinking this company is share. As in, what is the reason? There is no reason.
Okay, I get you.
Yeah.
Yeah.
The one you're saying, it's like somebody I knew back in the day who was buying stocks based on what he's seen. Like you could enter a room like this and check our shoes and sees a lot of us are wearing Adidas kicks or whatever, and he'll go and buy Adidas shoes.
That's a
Adidas stock.
Kenyan-
No. Somebody from
Phil Fisher.
I cannot remember the name.
Okay. I
Some-
think he was,
somebody,
he'd
yeah.
go to a parking lot also and try to see.
Yes, stuff like this.
the mall.
Naona kwa
mall
store
imejaa.
watu wananunua nini.
Exactly. It's very rational at the end of the day, because you're just identifying this is where the market is, and if this company is selling, then there's at the end of the day it will reflect on the bottom line of the company, and the share will do well. Yeah.
Okay, so as we wind up, I have a few other questions that I want to ask, especially now regarding your personal trading and how you can help the average person. So first of all, what do you think makes you stand up? What gives you an edge in the market? What would you say is your advantage?
First of all, I want to identify as a regular trader, not as any better than regular. But I'm trying to join the 1% or whatever, the top percentage. That's what I'm trying to do. And for me, it has been a journey, and I think it has to be the same for everyone. A journey in the sense that you grow in terms of strategy, risk management, the money that you have for trading, however you grow it, but also you grow as an individual in terms of personality.
Yeah.
Personality, because a lot of the lessons we learn in trading are basically life lessons. They're things you can apply on regular life, and they make you a better person.
That's true.
So for me, I would say I've been willing to go through that journey. I think a lot of people are not always willing or realize how much work it takes to become a better trader or improve on your trading. I think real trading is like it's a grind. We are not different from like miners or farmers or whatever. People who really work hard with their hands. I think we are not different from them, because if you think about it, when you walk into that office in the morning, you don't know whether you are going to have your daily bread.
Yeah.
You literally don't. The same thing with farmers. when they go into farming at the beginning of the season, they don't know whether the harvest will come through or not. And it's a real grind, which as a new trader, as somebody who's trying to come into trading, you don't always know, because you find there is a lot of publicity by people who have maybe succeeded or not, I don't know, showing a lifestyle
Or not.
showing a certain lifestyle, something picture perfect Instagram,
Yeah.
grammable lifestyle, which is apparently trading lifestyle, but which I find not to be like realistic at all.
That's
Yeah.
not the trading
Because
lifestyle.
I think by the time you're good enough, you have that kind of money, you will not be doing that nonsense.
Yeah.
You will not be seriously.
Be humble
By the time
enough.
True.
the market will humble you. It will make you so humble. You'll not even, like, you'll be appreciating every dollar you get.
Yeah.
Mm.
So I think for me, it's just that resilience. I've been, because if it's quitting, ningekuwa nisha quit. Like I would have quit years ago. But there is just that mental toughness, resilience, the willingness to put in the work, which I have had, which has enabled me to be here today and find myself growing in terms of capital I'm managing, and basically just capital I'm managing, and as a result, earnings and basically the money.
Okay. And what advice will you have for someone? Now I'm a new person, I've met you, nimeona hiyo chat yako, then nikwambia sasa nataka kufanya hii kitu yako. The first 3 things you tell me advice. What are the 3 things you tell me?
I've found that most people who want to come into trading, especially now and in Kenya, is that they've heard there is money here.
Yeah.
Yes. So like they have this thinking, they were told by somebody or read somewhere or had something.
Ama waliona Instagram.
Yes. Or they saw Instagram. And they're thinking there is money here. And we Kenyans, we are very keen on short-term gains,
Yeah.
quick gains.
Yeah.
Yeah.
So the first thing I would basically just assess your mindset. How have you come into this, and why is it that you want to do this?
Yeah.
And basically set you straight in terms of, because the expectation level versus reality is a very different.
There's a big
Huge
divergence.
gap.
Extremely huge. And as Kenyans especially, I think it's a peculiar thing to Kenya, maybe even to other countries, but it's just, I find it peculiar because I think I have the advantage of having been in business, and particularly the financial side,
Yeah.
and being in situations where I've done a bit of actual investing, not shares and stuff, like in a company, and I make decisions on what to put up in terms of a factory or this or that asset allocation. And with that, it gives me a bit of perspective in terms of risk and return.
Yeah.
So it gives me a basis to acceptable levels of returns.
And risk.
Yes. So you find as Kenyans, we are thinking somebody is actually can approach you and tell you they want to give you this money, and they're expecting, I don't know, 100% or however much in a very short bit of time, which I find to be unrealistic. So it's that disconnect. People need education in this. The other thing I can tell people is that don't come into trading if you're not willing to put in the work. Trading is the only field where on your day one of trading, you're trading against the best person in the world.
Yeah.
True. It's like sports.
It's like going to on a marathon, and the first marathon you're running, you're against
Sure,
against Eliud. Like, what chances do you have? You have zero chance, and it does not exist.
Exactly.
I can bet 100% certain
You'll-
that Kipchoge will beat you and beat you properly. There is no competition. It doesn't matter who you are.
tumeanza mimi Ken na Caleb.
Hata mmoja akisimama hapa, mwingine asimame katikati, and the other one towards the end, chances are Kipchoge will still beat you. All of
Give
you.
a head start.
Yes, even if you have a head start.
You can bet on it.
Yeah.
That's true.
So that's the thing. It's the one business. It's very unique in that sense, because on day one you're against Goldman Sachs, you're against
Bridgewater.
Paul Tudor Jones, you are against
Jim Simons.
yeah, People like that. As in people who've been in it for 30 years, 40 years.
Managing billions.
Managing billions.
Hundreds of
You
thousands
are
of
you are
employees.
handicapped in every sense. they have all algorithms working for them.
Exactly,
They have all manner
exactly.
of things. They have all researchers working for them. You are properly handicapped, and you expect to come in
The one-legged
Make an
man
edge.
in
And-
ASCII
and- and-
contest.
and so the one thing, if I was to meet somebody, let reality, let just eat them with reality, a proper dose of reality.
Yeah.
Because even me, I was there.
Mhm.
I found myself after I learned trading kidogo, I'm just thinking, bado zinazangu kwa pesa ngapi? And all these things.
Free profit, Prado. Prado.
You're just thinking.
Rent ya Kilimani ni ngapi?
At that time, I'm staying in an SQ in Buruburu. Like you can imagine the discrepancy there.
Hey.
So it's that reality check which has to be there, and then just the willingness to do the job, because I believe, and it's not just on this one, it's just on anything. Patience, hard work, resilience, you'll get there eventually. Put in the 10,000 hours thing.
Yeah, true.
However long it takes to master your skill, because this is a skill-based environment.
Yeah, and it's a lifetime skill.
Yes, it's like photographers and whatever. They have to take 10,000 of them before they can say, as in to get to a point where they can, do something
World
really
class.
good, And it is again true with almost any field. So if I was to talk to somebody today, the third thing I would tell them is that,
Put in the work.
basically be ready to put in the work. It's hard work. It's lonely work. It's work you will suffer, and you'll suffer alone. You could be seated here right now, you're suffering, but everybody in the room is just laughing, and they cannot understand your suffering. They cannot even help, even when they want to. It's your spouse. They want the best for you, or your kid, or whatever, but they cannot help.
Haelewi hata kwanza.
Yeah, they cannot even get it.
They don't get it.
It's really hard. It's why I was saying it's a grind in that sense, because those days alone after, especially, forget now you have a good understanding
Of what is
of
happening.
some stuff. You can imagine at that point when you don't even know about psychology. At that point you're just thinking strategy. You're wondering what is it that you're doing wrong. Why is it that every time you just go wrong? It's like when you enter the markets, like they were told he's coming, then they go the other direction. Because that happens to a lot of newbies when you're starting to trade. So it's that the area around expectation and the reality, then also the mental space, the amount of work that needs to be put in. Those things are just what needs to be emphasized on. If after all that, and a very bad, pessimistic story about something bad happening in trading, if after all that you still want to do it, then you're good to go. Yeah.
Okay.
So another question is, so you said when you started out at that 2010, 2011, 2012, you started out with some friends.
Yeah.
How many of them are still in the markets and trading?
And what happened?
So there actually, I had two friends who we were trying to trade and planning to trade together, but they, for one reason or another, they stopped trading.
Both of them.
Yes, both of them. Yeah, but it's mainly because of it's life too.
True.
Many are called, few are chosen.
No, it's you go into different things, and then at the end of the day, trading is a business where you could be not having results, but at the end of the life doesn't care whether you have results or not.
Yeah.
So, and when you're beyond a certain point in terms of life, you're not being supported by your parents, as in you've crossed that level. So, as in you must pay your rent or whatever. Bills have to be paid and stuff like this. So you find because of this, maybe you have to go into another career or get into actual
Stable.
business. Yes. For me, that's why. It's not that they have lacked interest or whatever, but like the one person now, that Elias, a friend of mine, him is still, even now he trades just a bit, but not as much as he would want, or And then even him, he's very good in trading, but trading has that element of ups and downs.
Yeah.
True.
So if you don't have a way to cross over that level, I think there is a threshold which once you cross, you're in terms of you've had capital, it has been lost, you've managed to gather some more, your skills have grown, you've acquired a certain level of consistency, which if you don't acquire before life catches up with you, if you acquire it before life catches up with you, then you're good, because then you're able to earn a bit of money to support life. But if life catches up with you before you cross that threshold,
That's it.
then it will be very difficult to go back.
Okay.
Yeah.
Okay.
Unless you have a good support system. We were talking with Caleb here before the show. The way you find that in the West, people, based on what they want to do in life, they're able to start very early on, and they're supported by their parents.
Yeah, true.
And it could be on anything. We were speaking about a DJ in the Netherlands. Garrix, yeah.
Martin Garrix.
Yes, he started very young. He was, by the time he was 18, he was like a world-renowned level DJ. You know?
Yeah.
I find that to be very interesting in a career like DJing, you know. DJing is the career in Kenya in our times when you were seeing that is what you wanted to do.
No.
You are being disowned. You are literally being disowned.
Trading is at that point now.
Yes.
Trading is at that point now.
Yes, in a way. In a way, yes, actually. Because if you can quit your school or whatever
To do trading.
they're wondering, what are you doing?
Yeah.
You sit in a computer, yes. And what do? You make money. How? Do they give it to you? How? What did you sell to them so that they give you the money?
Who are you talking to in the computer?
Yes. These are conversations I've had with my mother. So,
True.
so how do you make, until the point where even if they don't understand, they just accept, you know.
Yeah.
They just accept that you do that and whatever, you go do your thing.
And what are some of the cardinal trading rules you live by? Like one, you said there's the 2%. Like you can't take more than a 2% hit on a single position. What are some other rules that you live by?
So what I can say about that 2% rule basically is just that I usually have the mentality for protect your capital
At all times.
fiercely. Just protect your capital.
So that's your first philosophy in trading.
In fact, it's usually rule number 1. Such that on rule number 2, when you're confused about a trade, I usually say refer to rule number 1. When you're not sure about this trade, refer to rule number 1. When you're like trying to
Fight with a stop loss or something.
you're undecided, refer to number 1. The other thing is this one I just apply. It's something I read somewhere. I don't know who said it. Somebody said it. There is nothing more stupid than staying wrong when you know you're wrong. Like you're wrong,
But
so you have known you're wrong.
Uh-huh.
And then you continue staying wrong. As in, it's really stupid. You think about it.
You know, and you still stay.
So it's regard to stop loss. When you have not put in a stop loss, ishafika, you're buying hope. You're thinking this thing will come back. And usually it never does. In fact, it never does. So it's that thing. So somebody had said that statement and I found it to be very appropriate. You know you're wrong. You now know. As in, before you enter the trade, you were thinking you could be right. It went wrong, so now it's wrong. And now you're still staying wrong.
It's like the example you're giving. You entered before candlestick closes. Umefunga shooting star.
Yes.
Lakini bado unabaki.
But you're still there.
Unashikilia bias.
Exit. And it's buying hope. It happens a lot with traders.
Yeah.
And even myself. And so it's these things. That's just small things. Quotes I usually like stick on sticky notes and stuff like this. Yeah.
Which help.
Which really help to when you're doubting yourself.
Yeah.
When you're confused as to what to do. When you're dilly-dallying in making a decision. Yeah. And now with the markets I participate in, they move very fast. You'll move, 5 lots of Nasdaq. 5 lots of Nasdaq is $50. $50, yes. It's $50 per pip.
Yeah.
Per pip.
10 pips.
So if you're 10 pips wrong, that's $1,000. That's $500.
$100. 10 people.
Actually put it at 10 lots. So 10 lots. So 10 pips is $1,000.
Yeah.
So $1,000, you're 10 pips wrong, and you're dilly-dallying thinking this thing
And it's $1,000 at stake.
and it's $1,000, you're wrong. Then it goes to 1,500 and you're thinking, shit, it'll come back now. Then it goes to 2,000. It's in there is no thinking at that point. So you just need to get out. You don't need to let it get to 15 or 20 or 30. It's better to just get out at 10. Even if it goes back, get out at 10. You suffered your $1,000 loss. It's in the pocket. You go with it. You'll get another one where you'll make 2,000. Yeah.
I think my final question is, what do you think about the retail scene in Kenya and the trading scene generally in Kenya? Like you've seen it evolve, I think. Before it was regulation.
Before us we
Kina
started.
Ken wakakuja.
No. The market for forex trading has never been regulated in Kenya.
Never. Bado.
Never. It's just never been regulated.
Not yet
It's
there.
now CMA is trying to do something.
Yeah.
But if you think about it, what they are really doing, they are regulating brokers.
Yeah.
They're not regulating you or how you do or you use your money. They are regulating brokers and potential money managers.
Yeah.
Okay. Yeah.
So that's what they're regulating.
Okay.
But in terms of what you do specifically or whatever, it's there is no regulation.
Okay.
Now, it's a good thing. For me, I really like the fact that now retail trading is picking up. It's being known. Previously, you'd find, you guys have come in at a good time. In 2012, I had been in a room somewhere and I'm speaking about trading. I'm the only one who knows what I'm talking about. It's in investment in Kenya has never been like a regular, normal conversation.
Yeah.
Like real estate.
Yes, it's in investment in financial instruments. So shares or whatever. Those
Bonds,
things were never
bills.
common. The only people who were able to invest in those things were people who were a bit knowledgeable.
Yeah.
But now it's becoming commonplace. Now with retail trading, especially with the younger people and with the advent of internet and smartphones being common and everything, then it has become people know about it and they're learning.
Yeah.
What they do not know, however, is that a lot of the new traders is how much work it takes to get into trading, and they're in for a very deep learning curve.
Yeah.
It'll just take time before they realize what the fuck is this we got into. Because the other problem is there is no one to tell them.
Yeah.
There is no way. So things like this channel will help in such situations.
Yeah.
Yeah.
But a lot of people, like I recall one day, my younger brother is like 20. His friend, they came over to the house. His friend wants to learn trading. So like my brother, I told him I trade. So he was asking me some questions. And I could just smell the naivety. I could just see it. And
Even the mindset itself.
even
Exactly.
the mindset, even like, I'm just thinking, boy, young man, this is what you've chosen to do. But for those who stick to it, I think at the end of the day, the rewards will outweigh the amount of, will really pay off for the amount of work you've
It's
put
worth
in.
it.
Yes, it's really worth it.
Yeah.
But the space is increasing. The advent of brokers into Kenya is also helping. I do not like the kind of advertising I've had by being done by some of these brokers. It's very manipulative.
Yeah.
Advertising.
Yeah.
And now where the CMA, the regulator, is supposed to do something about it, they're not doing.
Yeah.
Because I also think even them, I don't know whether they understand. Did you see an interview the other day being done by
Yvonne on Citizen.
Yvonne Okwara and some...
Peter Onyango guy from CMA.
Yes, there was a CMA person and two brokers there.
Okay.
Brokers is a forex.
Yeah.
Yeah,
Think
Pepperstone
Scope na
and
ingine.
EGM and
Scope. EGM and Scope.
EGM and Scope, yes. The one thing I was hoping to hear on that conversation was the concept of leverage. Nobody discussed it. It is the one bad thing about trading, but they never... The people who know about it are the brokers. They know about it. They know it is what they provide.
Yeah.
But they never said it. But it is not in their best interest to say it.
Yeah.
The person in whose interest it is to say is the regulator. He did not say it.
Yeah.
And my reason, my thinking is that he doesn't understand it.
Okay.
him is I saw his title was something about stress testing and whatever.
He's
And I'm just
about
thinking
risk.
he's basically an accountant.
Yeah.
He's coming in to check whether your balances, your liabilities versus your assets,
balance.
your assets can cover your liabilities.
Yeah.
And the client's accounts.
Exactly. So it is that element which and then I think even the same for Yvonne. She did not do a
Okay,
research
that's true.
to raise the proper questions.
Yeah. That's
Because
exactly.
she
And
tries to be informative, and like now, maybe she does the same for all the other fields, because you see, this is a field I understand.
Yeah.
So I knew exactly what she's lacking.
Yeah.
So those other fields she talks about, which I don't understand,
Maybe
she also lacks some other stuff about those fields.
Exactly.
So, but I felt that element of leverage is one thing which people need to understand
Better.
much better
Yeah.
in order to make decisions, to understand why Forex works or does not work for some other people.
Yeah.
Yeah. But I saw at one time Wallace Kantai is now with CBK, is a communications person. But I don't know whether you know him.
Yeah, I know him.
He was a news person, business news.
Yeah.
He did a thread at some point on Forex, and it was on
Informative.
point. It was on
Okay.
point. It was like things
Well
which make
researched.
sense. Yes, it was basically just on point. It was on point. You find now like that conversation by Okwara and those other people, because it lacked the element of leverage, they left a very key component. It makes the conversation misleading.
Yeah.
The context is not exactly, it's correct, but it's not correct. It's missing something
Yeah.
which should really be there.
Yeah.
True.
I feel you.
So with the advertising, I don't know whether you've heard on radio, especially for FX Pesa, there's
Yeah,
something
yeah.
about return.
Yes,
It's
like
in-
$50.
Yeah, it's in.
500, like,
They're just asking people to put in money because they know people will lose the money anyway.
yeah.
Yeah, true.
You know.
And they make from commission.
And the one person who should tell people about this
In a
kind-
legit way.
is CMA, but they don't.
Yeah.
So why don't they do it? And it's why I'm saying regulation is just something else.
There's a
Still
lot
have a
that
journey.
needs to be done.
I read somewhere, or somebody was saying, the way regulators are never ahead of the curve. Rarely are they ahead of the curve. It's usually they're just always after and way after, not like at slightly
It's like
way
the
after.
SEC right now with crypto. They're regulating 15 years into it already. Like that's what
Yeah.
they're thinking about.
What are they
That
regulating with crypto?
Actually, they're thinking about like ICOs, some of those things. Like you can't just go for an ICO. Those are some of the things they're working on. Yeah. Like for people who are investing, before you invest, what you need. Those are some of the things they're thinking about.
This is the CBK doing that.
No, SEC.
SEC, America,
In America.
States.
Yeah.
The CBK CCMA equivalent.
In America.
Yeah. So you're not talking about Kenya.
No.
Kenya hata hawashughuliki hiyo.
I'm not talking about Kenya.
Hiyo
No.
sasa tutakuwa
I'm saying,
unasema
just like
we're
you're
way
saying,
example, yeah.
The
You
regulators
do it
was,
way after.
after they're way back. Now I'm equating that to the SEC now rushing after crypto after it's become so big, and scams have already happened and things have already happened.
Yeah.
So I think the cycle is always behind, like you're saying.
But yeah, so the market in Kenya is good. It's growing. And then with also, I don't know whether you guys, sijui kama mshai tamak.
Tunatama sai.
No, you've provided yourselves with employment, which is very good. Eh?
Yeah.
And it's why I'm saying the fact that it's growing is a good thing, because now unemployment is real out here.
Oh, like stomaching, looking for a job.
What did you think by tamaking? I said you meant going to
Just
put
looking for
lami.
money, just looking for money.
Hustle to early.
No. Tamaking is seeking employment. That is where you walk around with brown envelopes, go to an employer, give that envelope. go to
Uende
another.
wengine.
Bado,
Yeah.
sisi bado.
And you have been very lucky, because I have been in that journey, and it's a very difficult journey to be in. And you can imagine a lot of the graduates coming out of this university,
True.
people out of high school, they're all seeking employment, and there is
No.
this is a very good opportunity for some.
Yeah.
Which can really do wonders for people. It's like the online writing thing.
Yeah.
Like people want good money from it.
Yeah.
And in as much as it's people, I've seen some news coming out of the West, the way people are cheating in universities and all that because of people in Kenya. For me, I see it as a good thing,
Yeah.
because people here, people have done up to master's level, and you have no job,
Yeah.
and you are an okay person. You have good communications. You have good interpersonal skills.
Writing skills.
You have good writing skills.
No job.
You should be employed.
Yeah.
By all means, you should be given something to do by somebody.
Yeah.
But you're
But
not.
the opportunities are just not there. Not
True.
because they are just not there. They're just not there. Like they are not there.
Then with COVID, who is hiring? Things are getting worse.
Yes. Then with COVID and everything, you find the jobs. I was seeing somebody on LinkedIn saying the way this was interesting. They advertised for a position. They got like, I don't know how many CVs, like 200, 300, 400. No, they got thousands of CVs. And those thousands of CVs, I think they said they narrowed down from 1,000 plus CVs to 200 by just checking the email names. If you're Caleb, come on. If your email says Caleb, some funny name, or the way young people now are putting up emails,
okay. Yeah,
they just eliminated first on that. Just to reduce the CVs.
Exactly.
Because you have 1,000 plus. The position is only one. It's just one position.
Serious.
One
1,000
position.
people.
Yes. 1,000 plus people. Or there were two positions, I cannot remember. Then now with 200, now it's where now they said, okay, fine. Now let's look at these CVs.
Can now go try.
And then now they remove, again, based on some very trivial reasons, just to remove, eliminate. Because at the end of the day, it's two positions.
That are remaining.
It's two positions you're looking to put somebody in, but you've received 200 people.
1,000.
He was advising young people how to be professional and communicate well, you know. Those funny emails. Like even my younger brother, I saw his name is Vincent. His email is Paul Wesley. Who is Wesley?
Totally different.
Wesley. Celebrity.
Who is Wesley? There is a celebrity called Wesley. Or something.
It's just copy.
Francis.
Stuff.
Yeah. So yeah.
But I feel like that's also something that I've observed. I've observed like how people are clearing school, and even if you're trading, if you're just even learning how to trade, the only thing that I think the big difference between you and someone who's tamaking is at least when you wake up you have something to do. Unajua kutama kata kiamka ana kitu ya kufanya like on a day to day basis, ana hiyo what to sit down and think about. Sasa wewe at least unaweza amka ufikiri na trading leo nimemake progress aje. So it's like you have something that is engaging you mentally and making you grow, so you feel productive also at some point. So
what I do know lakini is that for us and for a few others and for Kenya, with time trading can be like, you see the way they usually say this country has earned this money from multiculture, this country has earned this money from coffee.
As in the GDP is based on it.
Yes. Trading has the ability to move these countries to be a segment within the financial market, which this country can say proudly that this country has earned 5 billion, 10 billion, 100 billion in foreign currency. You see the money when it comes into Kenya, it's yours, yes, but it's counted as part of Kenya's money.
Yeah.
Yeah, you know. So they can say this country has earned this much money
From markets.
from foreign currency markets. And I'm glad because like you guys, what I see you guys are doing, particularly you three, then you're much younger, you're at a younger situation, but I feel what you're doing is like really right. So it's just a matter of time. It's just a matter of time before we are here in Taras, as Tromsky, as in we are not just seeing him, we are hearing him. We are walking around and you see, hey, Taras did this, Caleb did that, you know.
Yeah.
Bless.
And seeing people doing the right thing, so it gives me that thinking you're not the only ones.
Yeah.
Because I've heard of a few others, very few. Some of those I've heard, they're not necessarily doing the right thing, but you guys, I feel, are doing the right thing, going through the right steps to put yourself in the best position to succeed in this business.
Yeah.
So,
Because
and with your
positioning is
education,
important.
with the education you're offering, I think even if 5% of your clients, students, succeed, the impact it could have on this country in terms of foreign currency and
Growing the
basically
industry.
basically just supporting this country
Yeah.
because this country is in a bad place, in a bad way in terms of our debt situation. Everything is just bad.
Yeah.
If you earn money, you'll not just put it in forex. You'll invest it in regular things.
Yeah.
Those regular things, chances are, will offer employment, will offer incomes to others within this country.
Yeah.
But it is all because you earned some money
From trading.
from trading, which came from elsewhere.
Yeah.
Yeah.
So it's growing. I like to see. I like what I'm seeing. Really.
Okay. So I think
There's a
that's
potential, I also believe the potential is way, way big. In terms of investments, because there's only one SIB, which is forex fund, like a fund that manages foreign currencies. So I think as more people go for the licenses, as more people become licensed traders, as more people learn how to trade the right way from maybe now educational providers like us, it will now change the ecosystem of trading. Because also there's also a huge percentage of traders doing the wrong thing.
yeah.
So like trying to minimize that by what you're doing, such podcasts, giving people like the true harsh reality of trading. Kwambia watu trading like depositing $50 and like trying to give the reality will really, really shape up the industry. Because we also believe if you don't shape up the industry, no one else will shape it. Will shape it up. So it's good we've started. Like we know a few hedge fund fund managers. We know a few good traders managing 6 figures, 7 figures. So I just believe it's a matter of time, as you've said, a matter of time before the industry solidifies. People now start believing that actually you can work as a forex trader, not really as a trader, but in that industry, maybe as a there's a lot of positions in
And
trading.
the performance coach you talked about.
Performance coaching.
Yes, there are positions or jobs which could develop based around the
Trading.
industry.
Yes, around trading. Yes, around the industry.
IT systems,
Yeah.
Programmers,
especially programmers.
quants, quantitative traders. So there's a lot of opportunity in the market.
But like we've said, the regulators really come way after. My immediate worry right now
Use regulations.
with this business, actually it's not even regulation, it's taxation.
Taxation.
Yeah, I feel we don't have a good there is no good regime, taxation regime for traders.
For this industry,
Yes, which is specific for this industry.
Traders,
Okay.
And we are just bound to have some serious fights down the road before that is defined.
I
Yeah.
agree.
True.
That's true.
Even you guys, if you are to earn some serious money right now, you could have some serious problems with taxation down
Have
the
you
road.
faced any problem till now?
I haven't. They would rather not discuss it here.
But it's coming.
It's something we can discuss that one off the camera, but it's just something I foresee as a problem because the way this business works is not the way a regular business works.
Exactly.
Yeah.
True.
Like there are a lot of different players in the game.
Not even that. With regard to how you earn your money
Yeah,
in
exactly.
trading, the risk that you go through in order to earn your money and the losses that you've suffered in that process, even as you are learning, as you're coming up to being who you are right now, versus a regular business which sets up infrastructure as inventory or is offering services, charges a fee for that service with minimal risk. Because if you have inventory, it's right there.
Yeah.
It's not going anywhere.
Yeah.
Versus how you earn your money in trading, where literally your entire capital is at risk.
Yeah.
So how I've seen it being taxed in the West, it's very favorable. It makes sense for traders.
Yeah.
You're given certain room to maneuver. But here in Kenya, you'd find chances are our tax authority would probably charge you a corporate tax based on the normal rate for all companies.
All companies.
For all companies, which I don't think is necessarily the right way to go about it.
True.
I've seen some exemptions on capital gains tax, but I haven't had a chance to test them in terms of whether KRA will actually accept that or not.
Okay.
Yeah. But it's a concern, and as the business is broadening, is increasing, is deepening, these questions will have to be answered. Yes.
Yeah.
Yeah, important.
Yep. So I think from our end, all questions have been answered. So we've had an interesting conversation. I'm sure anyone who's been listening, you've picked up a lot that you can use in your trading. So ensure you just don't listen. Apply what you've learned from this podcast. There's a lot that you can leverage on. Make sure you leverage on the experience that you have gotten from about 4 people. If we combine our experience, I think it's 20 years plus in the markets. So you can learn a lot from 4 or 5 people chatting about markets. So I think we'll stop there. We'll catch you guys on the next one.
Mm-hmm.
Yeah.
Peace to everyone.